Good morning, ladies and gentlemen. Pedro and I will be with you shortly. Fire chicken in the house. Sorry if I blew anyone's ears out there.
Here we go again.
Ladies and gentlemen.
Here we go again. Ladies and gentlemen.
Striking's in the house.
Tell me that you're gassed up. I'll pass you a flask full of Jack Love at last. I'm at peace with this vast blood. Only took a crash landing down in the trash mud to figure out why I've been so smashed up. Holy moly, lonely only when I'm coldly zoning, cozy in my holy home without my homie ceremonies, owning in my own Roman.
Listening to Tree City West, all gassed up.
Maybe you could clone me, break the ache and make me hate the way forsaken snakes take their stake in what I make and break it. Baby, lay it on a plate, maybe shoot it out in space to watch it die. Either way, I ain't trying to lie.
Either way, I ain't trying to lie. Good morning, good afternoon, good evening, everyone. Welcome to DYOR Live here on the DYOR Media Network. My name is Tom, otherwise known as Striking, here in the digital media world. So glad to be hosting another show. Today is July 30th, Wednesday, July 30th, 2025. One day closer to the new year, one day closer to my birthday, one day closer to the sun going supernova and fixing all of your cheating problems in crypto. Big day today. Today is Fed Day. We're waiting for Jerome Powell to speak in about an hour and a half. 2.5 hours. To be, in an hour and a half. 1 o'clock. And we'll see where rates are going to go. I'm betting rates are not going anywhere. Why? Because another number came out today, the GDP forecast, and that the U.S. economy grew by 3% in this reporting period, which means the economy is growing well. Now, many people are reporting, including my good partner and friend Pedro, who is not with us yet this morning, that actually, if you take a bigger picture, zoom out, the economy is not doing as well. It's slowing down, the tariffs are hurting, supply chains are a mess, this type of thing. But in the short term, big time gains, so the markets are reacting accordingly. We'll talk more about that later for sure. And also, it's not a proper week unless what, ladies and gentlemen? Unless Michael Saylor buys some more Bitcoin. That's right, he bought another $2 billion worth and kind of started the process for his Bitcoin treasury company with the man's just getting richer and richer, and he's having another company go public now as part of this preferred stock offering. And it's going to be a good one. It's going to be a good one and be very interesting. It falls right in the strategy that Pedro and I have been talking about, what's going on with Saylor wanting to be a Bitcoin-centric company. I'll go into that later. Anyway, this is normally when I would introduce my buddy here in the box, Pedro Garcia. He's running late. He had a morning appointment here. He'll be with us shortly to talk about the markets. Welcome everyone already joining us. Really appreciate it. Need a couple more viewers so I can read these first ads. We got a new segment sponsor today, but we need to get more viewers. Come on everybody that's watching. Let's share it. Fire Chicken, thanks for watching. Chuck Jansen, otherwise known as Fire Chicken, thanks for watching everyone. And HM Connect says, first. They were the first on YouTube to post. I always forget to turn off these banner saying starting soon. At least I remember to turn my mic on. I've got a new plug-in for my Stream Deck that controls my audio, so I can actually just see right here on my Stream Deck whether the mics are on or not. It works pretty well. Anyway, so welcome everybody to the show. As always, my name is Tom, and Pedro is technically here, but he's not here right now. Once again, for the third day in a row, I have a monster construction project going out here about 20 feet from my window. Jackhammers, asphalt eaters, dump trucks, you name it, it's going on. They're not just repaving the street, they're rebuilding the street out here. And so it is quite noisy here. So pardon me if you get a lot of noise. I'm going to have my noise gate up, which might cut off the first parts of my words. But you get the point. Anyway, what's Bitcoin doing? I'm going to tell you what Bitcoin is doing here. If this ever changes. Bitcoin's not doing much, ladies and gentlemen. That's right, it's not doing much at all. You know what, let me get rid of the all gassed up and get some yeahs going. If someone could let me know if I have an echo or something like that, I'd really appreciate it. One of you viewers, many viewers, starting off well with a total of 73,000 viewers watching us right now. That's amazing. Amazing. I've never had a crowd. Oh, wait. That's 7. And then the other platform is 3. I'm kidding with y'all. Anyway, this is Bitcoin behind me on the charts. Last night we did a Rumble Premium session for a little over an hour and a half, in which I talked about my learning to trade all over again, starting with wanting to do it, starting with being able, and finishing with being able to do it, the mindset it takes to do that, and the difficulties you have when you're learning. Thank you, Chuck. I really appreciate it. In this past couple of days, let me bring up the 10-minute chart. Let me bring up a bigger chart here. Let's bring up the hour-long chart. These past couple of days, I don't want to do that. Bitcoin has been trading in this range here from, I'm going to squeeze it down to where it's practical here. It's really been trading in this range from about 120 down to 116. A $4,000 range, which back in the day was amazing. You're like, oh my gosh, it went from 4,000 to 8,000 and then back to 4,000. That was massive gains percentage-wise. But now it's not so much. Now it's not so much. And it's difficult to learn to trade when the market is not moving. Your models don't develop. One of the models I have is after big liquidity sweeps, kind of like this one here. which I did take advantage of this one right here. Wait, when was that? Friday? Oh, no, I'm sorry, I didn't. It was not Trading Friday. I took advantage of another one right here, this one. Welcome, AI Wolf. Wally, you sound fine. Did you get a new camera? The images are clear. No, but I messed with my setup a little bit. I messed with things a little bit. There's good lighting today too. And the camera is just a cheapo Logitech one. It's not even 4K or anything like that. Anyway, thanks for Alpha Wolf for joining us. Walter, Pedro, and I mentioned just yesterday, where has Walter been? As we said, the hardest working man in crypto. Hope you've got some new projects that you're trying to make money in. I see that your logo has changed to something else now, so I'm guessing there are some new projects that you're in. Feel free to shill them in all of our different outlets. Every show is averaging about 200 to 300 views in live plus replays later. I got 15 free minutes before I got to go, but it's been a while. I wanted to say hi. And seeing that you are on, well, thanks a lot. I really appreciate it. Really appreciate it. Don't forget to join us on Rumble, too. We're trying to read some ads over there. I need more viewers. It's weird. We had 11 there, and now it dropped down to 6. Very strange. Very strange. Anyway, let me update the Bitcoin price here. One of these days, I'll make that automatic. So I was talking about our Rumble Premium thing last night, in which I spoke about my journey in trading. In the past couple of days, I've not been doing a lot of trading. Last week, I was off and not paying attention to the markets. And this week, this is going on. Consolidation, which is one thing, but it's not easy to trade. It's in a lot of trading forums, they refer to it as the idiot box. Because only idiots would trade in this, unless you're looking at very small time frame, quick in and out scalps, like trying to take advantage of this liquidity sweep right here and its rebound there, that type of thing, or this one here. I did take advantage of this one. I spotted that one on the 2-hour chart and played it, and it was nice. Even when I wasn't trading. But anyway, we talked about that. Or I should say, I talked about it on the Rumble Premium episode last night, because we have to do 5 hours of it. Got an hour and a half out. Pedro and I are going to do another one tonight for a couple hours. Talk about news and stuff like that. I'm sure I'll talk more about it. But anyway, let's get more to the comments. I see them approaching here. Strike Force. Strike Force. It's a very low market cap, and somebody else launched it with 1 Solana. I'll see what I can do. Strike Force. Interesting. Well, good luck with that one. Lots of stop losses. Yeah, there's lots of stop losses for people in here. Anyway, but this morning, we had a little movement in Bitcoin. Let's get to the... we'll go to the 3-minute chart here. We had a nice little, what you call, cup here. I was watching Crypto Lifer this morning, and he's like, "Hey, this thing's getting ready to boost." So I took a little trade this morning. Nothing was following my models, my setups, but. Crypto Lifer said it was bullish, so I thought I'd FOMO in, and I did. Made $24. How about that? $24. It was HMACs, and it's a joke when the bombs were dropped. We have future arbitrage bots. The arbitrage bots are already amazing. One of the things you cannot arbitrage bot right now is the Chicago Mercantile Exchange, because you got to go in and out of cash on that. Or have a massive enterprise account. But that's soon to be changing. Soon to be changing as the Genius Act takes effect and stable coins become official, allowed to be official methods of payment. And there's an article today about JP Morgan and Coinbase being able to link wallets to bank accounts, so that your wallet, if you need a fully KYC'd wallet for something, you can link it to your bank account and move funds between them seamlessly. Should be interesting to see how that plays out. Anyway, let's find. Oh, let me finish what I was talking about here. Anyway, little pump up. It didn't have any good volume with it. The volume behind my chair here. The volume quickly came out of it, and so I closed it off for a cool $24 win, which I believe was a 84% gain for the amount of margin I used. Arbitrage bots between liquidity pools, creating taxes organically. I think that's called bleeding them dry. Oh, this is the part that I'm looking forward to doing. A quick word from our sponsor, Technisport. Technisport. Technisport just partnered with Rumble to support creators like me and the entire streaming community. If you're spending hours gaming, editing, or even just watching streams, your back and body deserve better. Seriously. Oh, trust me, I've got this director's chair and it's not always comfortable. Technisport makes high-performance gaming chairs designed for long sessions. We're talking full ergonomic support, bold styles, and models built to fit both men and women. Whether you like a wider seat, a slimmer frame, or more neck and back support, they've got a chair that's actually made for any body type. And here's the kicker, 10% off and free shipping to the US on all chairs. Use code RUMBLE or just hit the link, pick a style you like, and get it delivered. Guys got a typo in there. And get it delivered straight to your door. So if you're upgrading your setup or just tired of slouching in that kitchen chair, check out Technisport. So if you're upgrading your setup or just tired of slouching in that kitchen chair, check out Technisport. Backed by Rumble, built for gamers. That's code RUMBLE for free shipping. Over here is a QR code. Go ahead and click that, ladies and gentlemen. Let our advertisers know our audience is interactive and interested in their products. Goes a long way. Thanks to Technisport for sponsoring this segment. All right. I like doing that. I like feeling like a paid shill. Anyway, welcome everybody that's watching us on Rumble and X now too. Let's get the X comments going here. We are not live on LinkedIn today. We don't go live on LinkedIn every day. All right, Chicken says, checking their products out now. Thank you, Technisport, and all of our segment sponsors. Haven't had one from 1775 Coffee, really, in a while. So let's get the message out. Welcome, everyone. Please like, share, repost. If you're watching on Rumble, there's a repost button. Repost it to your own feed. It helps us a lot. Repost. So is the share button and the like button. Repost, subscribe, follow, comment, just do it. The coffee people keep sending me text reminders to go check out. Probably why they keep advertising it on our channel. Welcome, everyone. Please like, share, repost, subscribe, follow, comment. Just do it. Welcome, ex-viewers. Why am I getting that mouse there? Very interesting. No idea why my mouse is showing up over there. Oh, now I know why. It is the pricing screen, I bet. Yep, that was it. All right, let's find that article about Mr. Saylor here. Michael Saylor, it's just the magic money machine, ladies and gentlemen. Just the magic money machine. Michael Saylor's strategy raises $2.5 billion in record stock offering to buy more Bitcoin. And I'm just going to talk briefly about this. I don't want to bore you to tears because we talk about strategy a lot. But what we're seeing is the transformation of a lot of companies from offering financial products, or in Michael Saylor's case, consulting, financial products based on the US dollar, to financial products based on Bitcoin and operating organically and entirely in Bitcoin. And we've talked about this a lot, that Bitcoin adoption as a currency won't happen until people live in it, until you get paid in Bitcoin or, a related asset. And you spend your money in Bitcoin and you live in it as you live in US dollars right now. And you exchange it for other things like US dollars or Ethereum or euros or whatever, only when you need to. And Michael Saylor is setting the groundwork for that with his company, and other companies are copying it, trying to become Bitcoin treasuries, as they call them. In other words, they'll be, lending companies because they have assets. Got to put your money to work, and how you do that, you lend that stuff out. But anyway, so Saylor and crew. I don't know who else works for him. You never hear anything like Saylor's trusted lieutenant striking balls is also speaking at the event. You just hear him. Anyway, they closed a $2.5 billion offering of a new company called STRC. It's new perpetual preferred stock. Funds were, I'm confused. There's two acronyms here. Proceeds were used to buy 21,000 Bitcoin at an average price of $117,000, bringing Strategy's total holdings to 628,000 BTC. If you can possibly imagine that. He's got 0.05% of the supply right now. 0.05 supply of Bitcoin. It's worth more than $74 billion at current prices. Hold on, let's do some math. 628,791 Bitcoin times 1 million. Oh my God. Well, essentially, if the price of Bitcoin 10x's, which it eventually will, he'll have, at the current growth rate, he'll have $628 billion in Bitcoin. That's more than $500 billion in Bitcoin. Oh my word. That's pretty damn good, if I say so myself. Anyway, once listed as a separate company, proceeds, blah, blah, blah. Once listed, STRC would be the first U.S. exchange-listed perpetual preferred security issued by a Bitcoin treasury. Let's go back here. This class of stock, if you buy it from Strategy or STRC, pays 9%. It says floating monthly dividend starting at 9%. Now, it doesn't say whether that's usually dividends and things like that and interest rates, it's understood to be a yearly rate. And so they're paying monthly, so it would be 1/12 of 9%. But still, maybe it's 9% per month, which would be amazing. Because that would be 100% per year pretty quickly. That's too much even for his thing. So I'm guessing that's a 9% per year. With U.S. Treasury bonds going at 5% or less, you're paying, the difference is essentially probably the risk, the calculated risk difference. Yeah, well, you're right. That's a lot of money, no matter how much you look at it. You know, and one thing he estimated that at the current run, well, I can't remember if he said 13 or 31 million dollars per Bitcoin. That was one of his. He says we have many plans and alternative directions for Bitcoin. One of them is we'll just go with 13 million per coin. Then you'd have $6 trillion. $1 trillion. It's simply amazing. It's the old, I guess it's the old saying, the rich get richer. Let's see. So playing the night, STRC marks Strategy's largest capital raise to date, surpassing its 800 million convertible note offering from June last year, and also follows the March launch of STRF, which Saylor initially described as their crown jewel, backed by $2.1 billion at the market program. New offerings aimed squarely at retail income investors with floating monthly payouts and no maturity. Yield products such as this offer exposure without direct spot market volatility, marking the process, blah, 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 blah. It's just unbelievable. But if you recall, in fact, we had a separate DYOR Now episode about Saylor, and he came right out and said, look, eventually everything's going to settle to Bitcoin, be the low, like gold was, and before that, goats, your farm animals were. And then all sorts of products will develop on top of that, from debt instruments to equity instruments that all boil down ultimately into settling in Bitcoin. Like sovereign debt, corporate debt, all these types of things. Equities, companies will be based on Bitcoin. Their share price will be traded in Bitcoin, not in US dollar. And he wants to be able to offer those products. And this one, that he's starting here, is one of those. He's offering essentially, you give him money and he gives you yield back. So he's creating essentially a staking for his US dollars. It's just, it's amazing. Let's see, STRC works because it pays dividends like a bond while giving indirect Bitcoin exposure, solving the problem for pension funds and insurers who can't buy Bitcoin directly. Investors, meanwhile, appear to be treated as both a yield product that fits their compliance requirements and a way to get crypto exposure without the operational headaches of holding Bitcoin themselves. As we know, one of the big problems that companies have with holding Bitcoin is the processes for holding a wallet. Do you buy it? Do companies buy it directly and hold it? And Joe down in accounting's got the Bitcoin wallet. Yeah, I've got 50 billion here. Or do you have multi-signature wallets? Or do you just buy a regular product that has Bitcoin exposure? And that's why many companies bought Strategy for so long, just their stock, or played in their options, because they could get exposure to Bitcoin without needing a whole new process flow for how their accounting department work, managing funds, risk, all that type of stuff. The risk managers and big companies take a long time to change their minds and to add new things because they're risk-averse people. And so when you can say, yes, this is a product that is built on Bitcoin, but it pops neatly into what we're doing right now and how we buy and sell bonds, same people are involved, the internal company thing, same approval, same yada, 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 then it's an easier, then they just have to look at the product themselves and guess their estimated rate of return. Anyway, thanks everybody watching on both Rumble and YouTube. Really appreciate it. X viewers, thank you. Don't get a lot of X viewers live. We get a lot of playbacks though. And I'm guessing, but the analytics for X are still pretty lousy. Elon's got to work on X to make it easier for people to click through to the broadcast, well, at least to understand that there's a broadcast page for each video you watch, or live video you watch, where you can comment and open it up in another window and watch. And sorry, there's a jackhammer's about getting ready to go off there. I expected Pedro on here by now, but I'll just keep going with this. Anyway, to finish this article up, corporate Bitcoin treasury playbook, as espoused by strategy, says, looks simple, but it isn't easy to copy. You need three things. You need 600,000 Bitcoin. You have to be a prominent Wall Street financier, and a stock price that trades above the value of your Bitcoin holdings. And currently, the value of strategy is far above the that fire chicken. So many browsers. One comes next for other digital asset treasury companies trying to follow the same path. If you've seen it, I know it's in your feeds a lot. It says such and such company wants to become a Bitcoin treasury. Such and such company wants to become a Bitcoin treasury. It's many of these companies realizing that their business model's a failure, or will be once AI takes over. So you see a lot of companies figuring out, we have some assets before they're pissed away by customers leaving us for AI. What should we do? And they're like, well, we have some Bitcoin, let's get more. Anyway, I thought you guys enjoyed just learning a little bit about it, because it's important to understand that it's not certain that Bitcoin will become the ultimate settlement layer for things. It's potentially decades away from supplanting the US dollar as the dominant currency of the world. I mean, the US dollar is, by far the strongest currency the world has ever seen. In most liquid, I should say, not strongest, but most liquid. And the current whole generation of risk managers has grown up using it and using a dollar and basing their research on risk for deals and stuff like that on the dollar, and they won't be switching over to Bitcoin anytime soon. They'll add little bits to it here, but not from. But people have to prepare for it, because a whole industry will develop in it, especially if the price of Bitcoin is increasing. If the price of Bitcoin still goes up faster than the market, and it will as assets are transferred from the stock market, from the bond markets and so forth, into digital assets, it will keep going up faster than inflation, faster than the S&P 500, all that type of stuff. It'll still going up, so that means money will keep flowing into it. So it'll get stronger. People will have more products based on Bitcoin, or backed by Bitcoin, secured by Bitcoin. The lending operations now are huge in Bitcoin. I mean, so many people have taken advantage of lending operations in which, when Bitcoin was $40,000, they wanted to buy more, so they put up their Bitcoin. Oh, siren number one for the show today. Siren number one. I don't know if you can hear it or not, but yep. I live on a busy street here in Chicago. This is Striking, and I have a place that overlooks the main street, and there's lots of sirens. If you played a drinking game on it, you'd probably get hammered every time you heard a siren. Yeah, that totally forgot where I was going with that. Anyway, Pedro, where are you? Running dry here, Pedro. I got Chuck holding us up on the streams. Got Alpha Wolf in the house. Bitcoin back, or BNB back down under $800. Should have shorted that one. That one peaked. I don't know if you can see this. Nope, it's right behind me. Bitcoin peaked right at my shoulder over here at 842 or 850, something like that. And I was like, man, this is a shorting period. But I didn't, because I as I said yesterday to Pedro, that I feel that the BNB price is a little bit manufactured here, a little bit more than the rest of crypto. And I thought there might be another pump coming, but there wasn't. I should have shorted it. Where is that other article here? Oh, here's the Circle article. U.S. stablecoin issuer has struck a partnership with a Florida-based fintech firm to make USD available to traditional financial institutions. Circle has agreed to integrate its flagship stablecoin USDC with a traditional payment platform dubbed Money Movement Hub, run by a Florida-based fintech firm called FIS. Oh, that's a public company. Interesting. The announcement comes on the heels of the passage of the Genius Act. And I think they're doing that to facilitate movement of money between JP Morgan's bank accounts and crypto wallets. Now with FIS integrated USDC with a money movement hub, which features multiple payment networks that financial institutions rely on, such as Bankware, blah, 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 I mean, it's a traditional bank. That's just a no-brainer. Frankly, I think most banks will not want you to have a crypto wallet. The money will just stay in the bank, and it'll have a section that says your crypto holdings. And behind the scenes, the bank will, have a wallet addresses built into their checking account system and stuff like that. And that'll eliminate your need to remember seed phrases. It'll be backed by the banks, and I'm betting that when they do that, the government will ensure that the crypto that banks hold is covered by the FDIC. And if that happens, if ultimately all of your crypto is guaranteed from bankruptcy, theft, or rug pulls by the United States government, you'll see the market explode even more. I'm going to write that down then, because I need to explore that FDIC angle that I just thought of. FDIC angle for crypto. I bet you Elizabeth Warren would like it. Once again, thank you to everybody watching on Rumble. They've been good to us lately. YouTube, not so good. Better today. I don't know what's going on with YouTube. We really want you to stop this business against crypto and digital assets. There's something left over from when you guys were actively doinking us a while back that's still doing it. Our viewership is down by 100% over there. In the corner in the box here is this woman speaking. Trump imposes 25% tariff on goods from India. And he says, remember, there was an August 1st deadline for all of these things to get done, to spur the people to do it in order to get the deals done and money coming in so that there would be no effect on the midterm elections coming up. Look at Fire Chicken with the Rumble, spinning Rumble icon there. There's so much I could talk forever about stable coins and Genius Act, but I'm not going to because you will die. What's interesting over here? It says Little Pepe meme coin sells out 8th stage of pre-sale. How and where to buy Lil Pepe? How many people are gonna cheat that mother effer? 8 rounds of pre-sale. I hope it's all at the exact same price and that launches at that price. If not, if people got lower rounds and each round got a higher price, the cheating will be unreal. All right, let's go back in and check in on the Bitcoin. Actually, you know what we should check into? Let's have a discussion about XRP and Rumble. All right, I mean Rumble. Ripple. Ripple through the tulips. Oh, look at that. XRP positioned for strategic reserve and payments in Logistics Health SEC filing. XRP interchanges Logistics Health files with the SEC to adopt it as both treasury, reserve, and payments engine across its healthcare and tech operations. Interesting. Anyway, who out there thinks that Fire Chicken thinks that Pedro is right and that XRP is going to pull back a little bit, maybe back under $3 for a little bit, and then launch? Pedro, I believe, is calling out $9 eventually here for it, which I just can't believe. First of all, I can't believe because I didn't buy it when it was 50 cents. XRP trading at $3.14, $186 billion market cap. I can't believe that. $186 billion in XRP. And so now you know why. Where's the chart for this thing? Let's go get the XRP USDT. That's the 3-minute chart. We know what. Let's get the hourly chart here. So this big pump here last week, up to $3.64. Our good friend Oscar Ramos back here during this pump right here was having live streams just waiting for it to get to $3. And it did. It came up to $3, and as you can see, it came up to $3 in this flag here. And so people are like, "Uh-oh, it's got legs." And sure enough, it pumped again. Just right here, bang, boom. And then it started to dip a little bit. And these big sales here, people taking profits. And I bet when we see the corporate filings, I bet that we find out that Ripple sold a whole bunch of tokens here to raise many millions of dollars to fund its operations. Because that's what they do. And I always thought it mattered, and it artificially held the price down. And I still think it does, but now when it's so much more valuable, it doesn't. But anyway, yesterday on the show, Pedro was talking about the price coming down here first, and then, I don't know how you do those connecting arrows that people do, and then going up this way. The old go down to go up thing. But he wasn't talking about like this. He was talking about like that, to $5 and then working its way up to $9. Would be nice if it did that. Would be nice if it did that. Let's take a look at Nasdaq. Starting to trade Nasdaq a little bit here. Not today, because today is the Fed day, and the interest rates are going to come out in 40 minutes. But we'll be having a new exchange partner on the network here soon. One that you can trade Nasdaq on. Our longtime partner, BitFi, is an exchange focuses on crypto, and other exchanges focus on things that are not exactly crypto. Like this is an exchange that's crypto-centric, but you can trade the Nasdaq on it. And you don't have to buy a whole contract and that type of stuff. Just like anything in crypto, you can buy as much as 1 cent. No, I don't know what the minimum buy is, but it's not a whole contract. Anyway, there's just a line of dump trucks outside. Anyway, I've made a few Nasdaq trades. I made one on Monday morning, in which my trading strategy, I call it the 200. I don't have any indicators up on this chart because it's my different browser. The 221 price actions underneath the 200 period moving average, and it comes back up and breaks through. And then the 8 period comes up and meets price action, and then the 21. The 8 period is like, okay, the model is starting. The 21 or 20, whatever you use, comes up, and that's kind of like the reinforcement of the move happening, the model happening, and it works a lot of times. You can almost count on it working, more often than it doesn't, except when Mr. Trump speaks. Then Mr. Trump likes to speak Monday mornings about 10 a.m. for some reason. and I should have known that. And he spoke, and while he didn't have bad news, he didn't have any new good news, so the market sold off and stopped me out. Anyway, but you stick to your trading rules, and I'm waiting for that model to come in again. And let's just put the indicators on here and see if it's something. Multiple moving average. Let's get those set up right. I set mine up a little different than Pedro. For no other reason that he consumes way more information than me, because I am new at this and I'm not really capable of consuming that much information. Don't need plot 6. Actually, here's the interesting thing, is that the on the Nasdaq, the model appeared. This red line here is the 200 period moving average. I don't know how well you can see it on you're looking on your phone too, or just listening. But price action, it came above this, before the open this morning, above the 200 period moving average. Dipped down on the open, but that was just morning volatility, and then when GDP came out. And then has been slowly going up ever since. I have no trade open in Nasdaq right now. And I was long yesterday for a little bit, and then I was not. I closed my trade out at break even just because I wasn't able to watch it anymore. And I'm new to Nasdaq. I don't understand its feel. Gotta figure out a way to get the Nasdaq in the great graphics machine. Why didn't that turn off? Let's see the stream deck here. Pricing. Window. There we go. Need to redo it. Nasdaq. NQ. There we go. Now we have the right label. Anyway, a bunch of new viewers over on Rumble. Thank you very much for joining us. My name is Tom, otherwise known as Striking here in the digital media world. My co-host Pedro is running late today. Very late, I might add. He normally goes over the markets, and I am the one doing the learning about the markets. Do the commentary, the witty humor, and the entertainment. But today, I've got to play both roles here and talk at length about things that I'm not actually that familiar with. So many of you that are joining here, I see, probably haven't watched our show before. And I've been going through a process of which I've been learning how to trade futures again after not working in the futures markets for 35 years, 34 years. A long time. People had entire careers. Anyway, in the corner, I'm monitoring the Bloomberg feed for news about interest rates or Trump speaking or anything like that. But anyway, I was talking about the trading model that I've been using here. Let me get this down closer to me so I can talk about it better, point to it. Here, this red line is the 200 period moving average. And this type of strategy I have not found to work really with meme coins and things that aren't really liquid. These setups that I've been practicing are meant for the very liquid things like Nasdaq, Bitcoin. As price started trading above, a little backwards here, trading above the 200 period moving average, you can see this orange line here with it. The purple line is the 8 period moving average. Price action is coming up to touch that. The orange line also was coming up. That's the 21 period on this moving average. And that signifies when that happened back here, it said, oh, we're going to get a little pop up and it's going to do it. And sure enough, it did do that. And that's a model I play I've learned to play a lot thanks to Sam Price, otherwise known as Crypto Lifer. That's one of his stalwart models that he uses, and I learned that over in this forum. And he's been using it for years, and I should have started using it after I had him on the show 4 years ago. Pedro and I would have a big fat studio if I had done that. But it works pretty well. It works pretty well. It's not meant for, that model doesn't really play out for an all-day trade. For me, it seems to play out for about a trade an hour long. If you're looking at the minute chart, you're looking at the 5-minute chart. Oh, I'm sorry, this is the 5-minute chart. Let's look at the minute chart. I guess here's a better example on the minute chart here. At 11 o'clock, around 11 o'clock or so this morning. All right, got something in the old mouth here. Price action came back up above the 1 minute, 200 period moving average. It dragged the 8 period up to the price action. You thought, okay, that's good. And then the 21 period moving average came up too. And then, of course, we see a nice little gain there. And if you had done a 100x leverage trade, you would have at least made a 1-for-1 victory on just that little movement right there. So that's what I've been working on. I'm still not good at looking out at trades more than a couple hours. Like one of the master friend teaches us to look at this is what the next weekly candle is going to be. I'm like, I can't even figure out what the market's going to do in the next 10 minutes, never mind over the next week. And people that can do that have a lot of experience, and I'm trying to absorb it all. Fire Chicken says, I use his basic setup as well for short-term trades. Yeah, works well. Thank you, Sam Price. What the hell is coming out of my mouth? I had Dunkin' Donuts avocado toast this morning. It's got all kinds of seeds in it. Those apparently are coming out. So now, what happens in all of these, you got to be careful of, because this trading setup works in reverse too. If the market's going down, you just flip your chart here. This chart's upside down. The model works in reverse too, many times. Not as well. Most models don't work exactly the same in reverse, because going long is different than going short in risk. But as time goes on, as the price is higher than the 200 moving average, it comes up and the 200 period starts to meet it. And so you have to start watching this. And if you don't get out of the trade, at 200, see, it's happening right now here. You're watching that there's a selling happening because people are putting stops underneath that 200 period moving average right here. And if I were to open Bookmap and look at it, they would be having stops in here to keep it right under that, or under similar areas of support. Like this line right here. There's a somewhat small double bottom there on the minute chart. They put their stops under right there. And as the 200 period comes to that, the price action is going to move right to it. It's going to clean out those stops. And what happens is that the price then dumps. And it's a boop, comes right down here, just like that. It works out like that many, many, many times. In fact, it's more than 50% that this does that. So you have to be careful about that. But it's a good trade setup, and it's been working for me. It's my first trade setup that I moved from trading in the demo account into real life money. And like I said, it did okay. It paid the bills last month. Not paying them this month because and why? Because if you remember at the beginning of the show, I was talking about that huge idiot box we're trading in on Bitcoin. This is Nasdaq we're showing right now. Oh, Pedro, where can you be? I've been on an hour without thee. I wish you'd come back and show us the charts so we can all get fat bags. That was to the tune of Pearl Jam's Last Kiss, which is actually another guy's song from ages ago. Anyway, half hour until rates come out. I'll stay on until the rates come on. If you've got any questions, let me know if you want to chat about something. Let me know. Need a couple more viewers to tune in. Now, so I can read another ad. I don't know if you know, for those of you who've been watching past couple of weeks, I've been reading a lot of Rumble ads, at least one, on average, 1 to 2 a show. The channel now, because of that, I believe it's $18.46. That's right. That's how profitable this video business is. Let's see, which one is it? Is it this one? Yeah. And let's bring the TV back. That's how profitable this business is. Oh, you know what's funny is look at that. Just as I said, look, it's coming back towards the 200 and dipped. It started moving back up again. Ha! I love it. Well, generally all of these, I know you're asking, how do you know, Tom? How do you know? And as I found, and as people have been telling me, is that you have to wait for confirmation of your strategy to set up. You can front run it and just say, oh, it's probably going to happen this way, and then take the trade. That doesn't work for me. I'm not good at front running things, saying, oh, I know this trade setup's about to happen. It's going to cross the 200. A lot of people, just as I was explaining here, saw the price action coming down here, saw the 200 period coming up, and just made the assumption that they're going to meet. And then the price will dump after that when it hits people's sell stops. As you can see now on the chart, that didn't happen. The great market said, not so much, we're going back up. If anything, just a little bit. So don't front run things. Hold on, I've got Mrs. Striking. Anyway, Mrs. Striking back from her midday appointment. Normally, I have time to go off screen and call her back or message her back. But without Pedro today, well, thanks to everyone that's watching. We really appreciate it. We're going to go ahead and we got a whole bunch of ads here today. Let's do pickaxe. Well, ladies and gentlemen, Rumble's been doing some great stuff. They've been very good to us, to Pedro and I. And as you know, we read a lot of their ads. And we rely on them to distribute our show and all that. But Rumble is trying to increase the ways and the methods in which you can consume their product. Rumble wants to go ahead. They've developed this great cloud system. They don't want to rely on having to pay AWS or DigitalOcean or people like that to distribute their products. They've done a great job developing their own product and their own distribution system with the Rumble Cloud services. And that gives them the ability to more easily integrate on their own terms and cheaply with other things. So this segment is brought to you by Pickaxe, the free speech social media platform that's not run by bots, big tech, or censorship industrial complex. Man, once again, you guys got to have your grammar checked here. It's not easy to read. If you're on Rumble, Pickaxe is your next move. Think of it like if X and Substack had a baby, but with more freedom and smarter tools. Oh yeah, now I remember the punchline here. This is a really good one. You can post your Rumble videos directly in the feed, and they actually play in the feed with no algorithms hiding your content. Even better, with their new beta feature, you can connect your Rumble channel to your videos in live streams. You can connect your Rumble channel so your live streams and videos auto post. How about that? Plus full article creation, paywalls, revenue sharing ads, and the ability to have ads on your content with your own promo codes and tracking links so you keep full commissions on sales. And yeah, free blue check verification so bots and burner accounts don't hijack the conversation. Pickaxe doesn't manipulate your reach, it amplifies your voice. Freedom of speech and freedom of reach. I love that one. Freedom of speech and freedom of reach. That's the best. Check it out now at pickaxe.com and take your voice back. There's a QR code right over here, ladies and gentlemen. If you're watching on your TV, hold your phone up like that. Click it, show our advertisers that our viewers are interactive and want to learn more about their products. It helps us out if you just visit them. It really does. Also in the comments here, if you're watching on your phone or something like that, in the comment section, there will be a link auto-magically placed in the comment section saying, hey, learn more about this. Please click that. No, this is one of the advertisements. They're not asking for any money. All the other ones say, hey, our new special pricing, use this promo code, get a better price. This thing is totally free. Pickaxe is your next move. Anyway, thanks to Pickaxe for sponsoring this segment of DYOR Live. Pedro and I are very, very grateful for that. I love it. There's a whole bunch of new ones here today. Whole bunch of new ones. I'm not supposed to read the other names out. Plenty of rules for this. Fire Chicken, thank you very much. Signed up for an account through your link on Pickaxe. The Nasdaq's starting a little move up. I wonder if, as it's getting closer to Jerome Powell speaking, they are faking us out a little bit. I'm not getting any trades now. It's just going to be a money loser. With futures, you can go long and short at the same time, and so you can essentially say, I'm betting the market will go either way. The trick is that the people on Wall Street know this too, and when they move the market, they have algorithms that tell them where the stops are for each of these orders, and then they move it around, just clicking your stops without allowing you to make profit, unless it's a really big move. If it's a really big move and a lot of people get in it, you'll get stopped out of one order as the market moves against it, but then win on the, like, say if the market goes up like it is now, you'll get stopped out on your short, but you'll win on your long. Hopefully you win more. Wow, it's really moving now. Actually, I have such a small time frame up on the 1 minute chart. The market moving ahead of Powell's speech. Let's give a public thank you. Fire Chicken. If you haven't checked out Fire Chicken, please do so. The symbol is FCKN, Fire Chicken. Look it up on Dex Screen or Dex Tools, etc. Fire Chicken's been pumping lately. It's been moving and grooving, I have to say. Pedro here would probably review it. I'm struggling just to be able to review Bitcoin and Nasdaq. Okay, let's get back to Bitcoin here. BTC, USDT. Oh, wait a minute. That's not the right chart. Not the Binance one. Tether and Binance. See, like I said, we've been trading in this idiot box here for since the 15th of July. So it's a long time to not have any significant price movement. Like I said earlier, this sweep here and money printer model did well. It was a good one. But if we come down and look at what's going on, this is a 1 hour chart. If we look at let's go to the 5 minute chart here. We see nothing is going on. And probably there was a little fake out pump here, like I said earlier, made 24 bucks. Thank you very much. And then it came right back down. Everyone's waiting for the market. Strangely enough, volume has done this. kind of followed that, but I was expecting volume to be just flat like that until Powell talks. I personally don't think he's going to raise rates. At the beginning of the show, I talked about how the GDP report was good. And previously, Powell spoke about how the economy was humming along just fine and strong, and the labor force was in, the numbers were good for that. Gross domestic product, GDP, was doing well, and all their labor indicators said that there was not going to be a recession, and that they were keeping rates higher because they thought that it would be needed because of the tariffs or inflationary. But it turns out that the articles have been talking about tariffs not really affecting inflation that much, not really affecting the economy that much, because it's going along nicely anyway. And so Powell came out and said, look, we're holding the rates high for now. There's no need to lower them if we want to guarantee the economy to be smooth. So he did. And then we get to today, in which we have strong numbers about the economy. And Pedro is skeptical of the government, and rightly so. He caught them fumbling the jobs numbers last year under the Biden administration. He's skeptical of their rosy outlook on the economy. Like I said earlier, if you zoom out, the economic indicators are showing a slowdown. But now with this nice 3% growth rate of the GDP in this reporting period, there's no chance. I'm not going to bet on it. Nope. No. There's no chance that Jerome's going to come out and say, what's Forex Factory doing here? Where is that tab? I don't know why I don't have that tab open. Oh, let's see. Filter, none, USD, apply filter. All right, so the numbers that came out today, ADP, non-farm employment change. ADP, for those of you not in the U.S., ADP is a payroll company. Does millions of payroll for people. They have a lot of data on payroll, and so they know pretty well. But their number never really jives with the government's number. And as you can see here, it says GDP, the advanced numbers for the quarter, up 3% here. Expected 2.5, and it was 3. Jobs, new jobs created, plus 100,000. Forecast was plus 77,000. Pending home sales, minus 0.8%. Not that great, but good. We need. I was reading another article about how rents are starting to come down, and even groups like Blackstone, not BlackRock, but Blackstone, which buy scads and scads of housing and then raise the rents up a lot, are having trouble with that. Crude oil inventories came in at minus 7. Why is that? Down 7.7 million barrels. Forecasted minus 2.3 million. I don't. That's not really going to impact what Pedro and I do here. Although he does trade that. But anyway, the interest rate that the Fed gives out to banks right now is 4.5%. Expected to be the same. Forecast is the same. Fed watch, everyone's saying the same. But there's still people saying, hey, it could move. Countdown to the rate change. Kathy Jones, Schwab, chief fixed income strategist, so she deals with these income things. Well, that's an interesting story. The U.S. sanctioned the Supreme Court judge, Jose Balacer, or whatever his name was. He's the Supreme Court judge that's kind of taken over power in Brazil slowly. and he's the guy that forced X out of the country and told his own residents of Brazil that if they use X, they'll use a VPN to get X, they'll get fined $8,000 each, and the average wage in Brazil is $41,000 or $4,100 a year. Now this is just special here. All right, ladies and gentlemen, Jupiter from Fire Chicken, thank you very much for the $10 Rumble rant. Fire Chicken. Jupiter has a new token verification method for smaller projects. Fire Chicken is trying to get that done, so I'll be calling in favors when needed. Thanks, Tom and Pedro, for all you do. Thank you, Chuck. We appreciate all of these Rumble rants very, very much. You've been a generous man over the past 2 years. Thank you very much. And what Chuck is talking about, if you go to the Fire Chicken feed, Chuck, put in your comments here your Twitter account for Fire Chicken, and go to it. And then Jupiter has a new thing where if you have a verified Twitter account, you can like projects on the whatever Jupiter system it is. And I did that today for Fire Chicken. And so you know that the likes are from actual accounts. Lil Jizz? Lil Jizz? Little Gitzik? Lil Jizz. What's the best trade for today? Well, the best trade for today right now is no trade. Because in a half hour we have Jerome Powell coming on to talk about in a half hour to come talk about interest rates. And so the market has lower liquidity now than it normally does. A lot of traders are waiting on the sidelines for what he's going to say. And you kind of have to wait till about 30 minutes after that to start trading. If you're talking about meme coins or other smaller altcoins, I can't really help you with that because you need to wait for Pedro to come back on the air. My co-host Pedro is off this morning here. But the best trade right now is no trade. I am not in a trade. I've been watching the Nasdaq here. Do I have the pricing on? There. I'm watching the Nasdaq here for a potential run at some new highs. If Jerome Powell comes out and says the economy's cranking along just fine and the government is not going to lower rates right now, you'll probably see it go up a little bit here at the Nasdaq because the people that are trading this know the same data and the same stats that Jerome Powell does. But if he comes out and says the economy's doing much better, and then if he hints at the economy not being overheated and that it's growing slowly but surely, which is the best way to grow, and that inflation will remain in check, then you'll see Nasdaq pop up to a new high here. It'll go up above 24,000 again, or get up into the 24,000s pretty quickly. So that's something to watch. And remember, almost all these events are, buy the news, sell the buy the rumor, sell the news. And so there's also, as you may suspect, why people like me and other people are sitting on the sidelines right now, is that there's a good chance for a dump during Jerome talking. Just like on Monday, when I was long on both Nasdaq and Bitcoin in one of my trade setups, and it was going well. Both trades were in the green. Yay, all is great. And then Trump started speaking, and then boop, into the red. And he didn't even have bad news. He had good news. It just wasn't as good as people hoped, so they sold off. It means the market was anticipating something better. If I could anticipate exactly what about it, then well, I'm not going to tell you what to do with your money. I can't do that, little jizz. But what I can say is there's two scenarios. If Powell is rosy and says that the economy's doing well and it's growing at a rate that's not overheated, then it'll be a good thing, and the market will probably go up. If he's like the economy is GDP was strong today and we're still worried about the effects of tariffs being too small, I mean, the too big and being inflationary, you'll see the Nasdaq dump, and Bitcoin will probably follow it. Let's go back to Bitcoin here and take a look at it. What's going on here? I don't know where you started watching it today, but Bitcoin has been trading, and of course I don't know what style trader you are either, but it's been trading in this range here for almost 12 days now, 13 days. Let me get off this. Let's get to the 1 hour chart here. Let me bring up the Bitcoiner here. There we go. All right, so behind me, let me make the, here are what I call the idiot box here. The idiot box is when Bitcoin consolidates in a range for a period of time and just is chop, and that's what's going on here. It's very dangerous. There's been one good move in the past 10 days, and that's this liquidity grab right here. Dropped it down, made the money printer model, boop, right back up. That was a good thing to happen, and so that's personally what I'm looking for. I'm looking for some words out of Jerome Powell's mouth that makes the market sell off and grab all the liquidity that's down in these areas. If I were to bring Bookmap up, you'd probably see a bunch of liquidity down in this area. You certainly would see some right here because it's the underneath the recent lows, so that's where a lot of traders put stops. And wherever, obviously, as if you watch this channel, if you know that we look at pricing going to where the liquidity is, like wherever there's a bunch of orders, wherever there's money, that acts like one big fat effing magnet for price to go to it. Because if there's no big fat places of liquidity, nobody can put orders in and get big orders filled. Like a good example, Saylor bought the other day, or over a period of time, another 21,000 Bitcoin. Does he do it all in one trade? No. But still, that's a lot of liquidity. That's, it's many billions of dollars, $2.4 some billion worth. And so he has to do that where the liquidity is. So if he puts in big orders to buy under the market, pricing is going to say, I want to grab that liquidity. And other traders are going to say, I want to grab that liquidity, grab that money, and go get it. Fill my orders there where I can get the best possible price. But anyway, that's what I'm waiting for. Obviously, you can do so goddamn helpful. Thanks. I appreciate it. I got my stop loss on at 99.5. That's a good range. Yeah, very conservative. I guess the question is, are you trading futures or spot? I'm guessing futures here, using stop loss. Yeah, futures broke, right? But anyway, a 99.5 stop loss. Very conservative. I'm guessing you're using very low leverage for that, unless you have an account with a shit ton of money in it. But let's look at that. What would that equate to here? Where's my 99.5? Oh wow, you're wanting that market to go on a one for one basis, go to 135, and a 3-to-1 base. You got that order in for 160, 4 times. Yeah, that's what I figured. That's a good order. I like that. I like that order. It keeps you safe from the daily market movements. Only a really bad downtrend will stop you out And by then you will have figured out the market will be going down and collapse your trade early without even losing all of your risk. I actually have to do more things like that. I do a lot more higher leverage, smaller time frame trades. It's a lot more stressful. Like your trade over time will play out. Because otherwise you would have to declare that this today, right now, is the highest Bitcoin's going to go in the next couple of weeks or months, and to say that right now is the top of the market, we're done. That's what, there's a lot of internet influencers out there saying that. You see that the O faces on the thumbnails. Oh my God, this is it. This is it. It's not going to happen. Bull run's not officially on yet. And that's all BS. Bitcoin is a market that's liquid enough to move a lot, regardless of the last few days of trading in this idiot box here. But that'd be interesting. That'd be an interesting trade to see to its conclusion. I learned from a guy named Master Friend that it's called the terminus, in which you say, a smart trade would be when you get 1-to-1 here, you take 50% of your profits, or whatever your personal partials is, and then you do that again, like here, and then if this is your trade, if this is the terminus, the final thing where your last take profit is, to see it go all the way up and win this trade at $165,000. As Pedro would say, that would be a massive dopamine hit. Exactly, it's like long-term one. Yeah, I don't do enough long-term trades, and I don't, simply because I don't have enough money to tie up in long-term trades right now. As I said, I don't know how long you've watched this, but I've restarted learning trading in futures after not doing it for almost 30 plus years. And I've had to unlearn old things and learn new ways. So I'm starting with a small amount of money that doesn't lend itself. There's a construction site outside. They're replacing the road out here. If you hear that noise. Breaking news. What is breaking news? Fed rate is unchanged. Unchanged. Let's go over to Nasdaq, see what's going on. All right, there's a little spike here in the Nasdaq. From that, still you gotta wait 30 minutes after this announcement here, not till Jerome starts talking, because see exactly that happened. That a minute ago, that candle there was big and green, and it looked like this was a bull flag. I don't understand what I'm gonna draw. Brush. Chart just doesn't work properly. Anyway, this here looked like a bull flag that was kicking off here after the announcement, and so a lot of people said, "Oh, unchanged. I'm gonna go long," and then the market starts selling off here now. And see, now it's going against you. I had to learn this the hard way. I lost money reacting too quickly for things, and it was the fun. As I talk about it a lot, it's that if you're going to trade Bitcoin and the Nasdaq, you have to not trade meme coins and shitty altcoins. You have to trade only the major coins that are liquid. See here, now the market's selling off. This was a classic move right after the thing. Let's go back to Bitcoin, see what that's doing. Nothing. Bitcoin is doing nothing. Let me get a smaller time frame here for the 5-minute chart. And you just see some local volatility, a little bit of a sell-off in Bitcoin. For long-term trades like you have on Little Jizz. Yeah, let me know if I'm pronouncing that correctly. That makes the announcements like today make no difference at all. But for the short-term scalp traders that are trading on the 1 minute and 5 minute chart, it's a big deal, these things. But the fact that it came in unchanged, the Fed says labor market conditions remain solid. So interesting notes. Labor market conditions remain solid means the job market is pretty full. No matter how much you hear people complaining about, oh, we can't get Americans to do this, and there's all these industries having problems because we're deporting all their workers. The government says, not so much. Obviously, there's probably some bias in there somewhere. We're going to have a group on here called Trueflation soon to talk about how industry, how that company is using data to predict what the real numbers are without any biases by sitting administrations. And see, back to Nasdaq here. My API doesn't pull in Nasdaq's price. I wish it would. I wish it would. Hold on a sec, ladies and gentlemen. Got Pedro call. All right, ladies and gentlemen, Pedro's going to be here in about 10, 15 minutes or so, I think. Maybe a little bit more. Had to help a friend out in need, he said. Pedro's good for that. No, an altruistic fellow. But what we're going to do, he's going to come back and we'll talk a little bit about Bitcoin in the markets on our regular show here. And then we're going to probably spend an hour or two in premium. Because we still have 3.5 hours to go in order to stay in the Rumble Creator Program. So, bro, we like watching the Fed in here? So you guide us? Yes. And in fact, we'll move to that. He doesn't speak for a half hour here. So when Pedro comes on, let's see if I can get the sound through this here.
Sense, given the understanding of a slowing economy, are we still going to see persistent inflation?
I think we are. I've been using the case that whenever you have a recession or a financial crisis, and we had both in 2020, that the economy fundamentally changes. And if you want examples of that, deglobalization and remote work are probably top of the list. This is not the 2019 economy. I know Chairman Powell likes to say that we see broad signs that the economy is normalizing or returning to pre-pandemic levels. That's another cycle. We're in a different cycle right now. And this is a cycle of elevated inflation. I think that the inflation rate is going to run around 3%, maybe as high as 4%. But I like to caution that I did not say 8, 10 or Zimbabwe inflation. And with that type of level of inflation, and that's largely what we've seen, we've averaged over 4% in the last 5 years on the inflation rate. That the appropriate
I'm glad I find you guys. It's my first big news day while trading. I'm used to it.
Not be talking about
but holding, not longing.
Highs in the stock market, in housing.
Well,
in crypto,
if you're new to trading,
down the line. I don't know what
first big news day while trading.
Yeah,
I guess let me know how new you are at this, or are you getting back into it, or just been poking around for a little bit. Lots of good advice that I've learned recently, which mostly involves not trading.
Yeah, I think Tim's on to something.
Having
If I
restraint.
were on the Fed, I'd be worried that corporate America is bottoming in here. They're learning how to absorb tariff policy, so they're pausing on a lot of things.
I'm super new.
Once we get through this year and
some basics, what you need to do.
They'll start spending again. And we'll be left with a labor
Make a
market
spreadsheet and record every one of your trades. Record where you got in, the reason why you bought.
So now you've got a labor market.
I have a spreadsheet.
In the mid-fours. Corporate America,
which model I used, trading model, whether it was just pure FOMO. Like somebody said, this one's going to move right now. Striking said this thing's going through the roof. One of the selections was Striking said. I don't make those calls though, but I'm just pointing out. And where you got in and where you got out, was it a winning or losing trade? Record as much data as you think you can, because after you have about 30 or 40 trades in there, and if you use an Excel spreadsheet or Google Sheets or something, you can sort and count and do all those types of things, and you can see when you suck,
tariff policy,
and when you suck at trading, and when you do well. And everybody's different. If everybody traded the same or had the same way of seeing information, then everybody would trade on the same day at the same time with the same model. But that's not how it works. Everyone interprets data differently. And if Pedro were to teach you something,
existing workers demand higher wages.
You know, Pedro teaches me things, and I think I'm doing the same thing as him, but everyone does it differently. So your data in your trade journal will give you different results. You'll learn, I learned that one particular model that I thought I was doing well with, I was actually losing money with most of the time. I had like bigger trades that won, but most of the little trades lost. And then I was like, well, that's interesting. And I went back and I looked at the bigger trade, and I found out that I had made that trade a mistake. I made it too large by mistake from my notes that I wrote. So I got lucky with that. So mostly I was losing on that. And you find out things like, hey, I'm no good on Monday. Like this week, interesting enough, this week, Monday is, this is called non-farm payroll week. This is the time of the month where the payroll numbers come out, and it lets us know how the economy is doing. It changes the liquidity of the market throughout the week. So you cannot say that like last week, Monday, Tuesday, Wednesday, Thursday, Friday were the same as this week, Monday, Tuesday, Thursday, because there's different news that impacts the markets differently. So Bitcoin will react differently, along with especially the Nasdaq price, than it would on normal days. Like a good example is on non-farm payroll week. Like on Thursdays, you just don't trade at all because people are getting out of the market, they're closing their positions, waiting for what Jerome's going to say today. And so liquidity goes down.
This really is the question. If you're not seeing significant weakness,
do you know about Forex Factor, little Jizz? Forex Factor. Go to Google, search Forex Factor. Here, let me put it on the screen here. Forex Factor is this website. It's a currency exchange website, but they have a massive calendar of every number that's out every day.
Which was in this data today, and
what they do is just put everything out there in a big calendar. I have the filter on right now, so it just shows today and U.S. things in U.S. dollars that are coming out of the U.S. And it says right here, today at 1 p.m., federal funds rate. They haven't updated it yet, though. Let me refresh this page here.
Which takes 6 to 18 months. And so we're going to start to see more of that tariff-related inflation. The inflation, by the way, today, the acceleration was in both goods
and that happens once a month.
Services.
And so on weeks like this, there's interesting weeks that you need to be wary of. Weeks that have banking holidays, like Mondays or Fridays off, throws off the liquidity for the week. And weeks in which major economic indicators are launched out there. And one of them is the non-farm payroll. Today, non-farm payroll, it just means all the jobs in the U.S. outside of the farming industry. Back in the day, agriculture jobs were 50% of the workforce or more. And those don't change because the amount of food consumed is relatively the same. Now with automation, electricity, automation, that type of stuff, the agriculture industry employs far fewer people in terms of its output. And in terms of the overall economy. So, but it's still called non-farm payroll. It's essentially the jobs report. and it was up. You can see on Forex Factory here.
But he's not trying to do forward guidance here. That doesn't mean he won't say the meeting still could be live in September.
Non-farm employment change.
In September, he may not have enough information to telegraph that at the Jackson Hole.
I'm sorry, this was ADP's non-farm. On Friday is the actual one that comes out of the government, so it'll likely mimic what's going on here.
In September,
and so
I don't think they'll be able to cut in September unless you see a very much larger deterioration in overall labor market conditions. We agree.
I'm going to stop being so complicated. I'm just going to tell you, write down your trades. If you don't write down your trades, you will lose money. Write down your trades so you have analytics to do.
Kind of environment.
Make sure, do you have a demo account? Demo trading account? Demo trade what you think is your good setup until you make money in demo, and use the same amount of money that you would if you can risk $50 a trade, and a demo account risk $50 a trade. Don't go in there and bet $100,000 at 500x looking for $1 million wins, because you have to have the right mentality. It took me a long time to learn this. You have to have a mindset that you're a winner, and if your trade journal is mostly green, you're going to get that hit in the brain here that says, hey, I'm doing well, I'm doing something right, and your confidence is going to go up. If your shit is all red because you're losing trades, even if they're only $1 losses, $2, $3, your chart is going to be all red or all losses. That's a negative impact on the brain. Doing this is having the right mindset is so important here. And it took me forever, and I didn't get into the right mindset until about
there's a lot of politics at play here,
January or so. When I was watching Crypto Lifer talk about it, and I had that revelation, like, oh my God, that's exactly right. Fire Chicken, thank you very much. He's going back to mining fiat. Got to do the regular job.
And he has some credibility within the Federal Reserve.
My bro is showing me this. Okay, thanks, nice. So let me know when to trade or when not to.
We can get a soft landing out of this.
The times to think about it, the times to trade are when the most liquidity is in the market, because that's when things there's the best chance for movement in the market. There's the best chance for not a small group of people influencing in the market. If you think like meme coins and stuff, at any point a whale can sell and just dump the price to a lot. In Bitcoin and Nasdaq and S&P 500, crude oil, copper, all these things that people day trade, it's impossible for one whale to dump the market. A bunch of people have to gang up to do it, to really dump it. But, larger institutions can influence the price for sure. But in this period of 7 a.m. Eastern, talking Eastern time zone, I don't know what time zone you're on.
Not going to get into the
7 a.m. to essentially 12 p.m. That 5-hour window. And it's really 7:30 to 11:30, but I give myself a half hour each. That's when the London markets are open, and the New York markets are open. And they overlap. And that means, and those are the two biggest financial centers in the world trading these things, especially Bitcoin futures. Chicago Mercantile Exchange has a certain time it's open, and the London, whatever you call it over there, is open at a certain time. And they overlap for about 4 hours a day. And that's when the most liquidity is in the market. That's when the most things happen that are predictable, such as the money printer model and things like that. And so those are the best times to trade. That doesn't mean you can't take trades later in the day, but during that period, and if you talk to day traders, like Pedro and I were doing this show for a while, much earlier in the day, but it didn't make any sense. Let me rephrase that. It was getting in the way of Pedro trading. You're like, you know what? That's when all the markets are open, and that's when we get the best time. So those are the best times to trade. If you're wanting to make the money, as they say. I'm not talking about the long-term trades, like that big trade you have, not big, the big time frame trade you have on. That's not so much influenced by that time frame. And what I mean by trading during this time, you want to, in that time period of 7 to 11, or 7 to 12 in the morning, Eastern time. you want to see your trade model set up. And if you don't have a trade model, you need to get one. And I can't tell you which one to use because everyone sees the charts differently and understands things differently. Like I said, I use two. One called the money printer model, and then there's a guy out there on YouTube called Master Fren, F-R-E-N, that has a number of videos, one of which he explains the money printer model. But those things start setting up during that time frame. And if it sets up during that time frame, it's likely going to continue the rest of the day. But if you see the same model setting up later in the day, towards the end of the day in the U.S., there's not as much liquidity in the market. People at the end of the day in the U.S. are selling their positions, or I shouldn't say selling, or closing their positions. Because most people don't like to carry them overnight. And then Asia doesn't open up until 8 p.m. Eastern time. So there's a gap in time there with very little liquidity. So things that happen between, say, 3 p.m. Eastern and 8 p.m., 7 to 8 p.m. Eastern, the markets can move. Trust me, they move, they can. But smaller groups can influence the price. And when that happens, it's not as predictable. Not as predictable.
The pandemic-induced inflation.
So those time frames are important.
Frankly, we have yet
Let me check the old Rumble here. I think
That
see if they've
is
given us another ad, and they have.
As Jim pointed out
Let's go
earlier
with,
in the show, this is a different environment than it was in 2019.
Let's go with
and that proximity to that inflation that is still with us.
AIM controllers.
From the
Ooh, a gaming one. I'm not a gamer.
I guess the dynamic of our
Well, not since
nominal
Sega
GDP,
Genesis when
our
I used to
animal
play their
spirit.
golf
You
game
mentioned
every day of my
stagflation,
life back
but
in
if
the
I got
90s.
real GDP coming down, I don't know what inflation's
All right,
gonna
ladies
do.
and gentlemen, I've got to
you
do a little
just
bill paying
assume
here.
A more dampened nominal
Are you ready to
GDP?
level up your
Is that
game?
the heart of
AIM
the matter?
Controllers
Like the
is where
Crater
custom
and
meets
Fitz investment
unbeatable
that
value.
Mike McKee
And right
talked
now, it's
about
the
this
best deal
morning?
of the year. We start with official Sony and Xbox
what
controllers,
we have
fully
is
compatible
the
with console
overall
and
economy
PC.
basically
No
moving
functionality
forward
is
in the
lost.
second
No,
half of the
no,
year,
no.
Not much more than that.
Then you go
That's
wild with
slower
custom
than the first
features,
half,
smart
but not a
bumpers,
lot
paddles,
slower
grips,
than the
stick
first
height,
half.
custom
This is a
buttons,
major slowdown
even
in the
design
overall
your own
economy as we deal
PS5
with the
snap
disruptions
panels.
due to tariffs,
This is a
among
much,
other things. It's been
the grammar in this one is
destabilizing.
much
There's an
better than these
uncertainty
other ones.
factor. If we
Good
get
job,
more
guys.
certainty, we should get
And here's the part no one else is doing. A lifetime warranty on all modified parts. That's right, lifetime. What other company does that?
Coming into
Exactly.
the economy. Those things we know.
Normally,
are out
a
there,
fully loaded
but
setup
it
would
really
run you
is. The beginning of the
$400.
second half of this
But during
year,
our
a lot
one
more
price
headwinds
promo, it's just
than the first
209
half did,
US
and the first
dollars
half
or
was not
182 euros,
insignificant.
no matter
Given
how many features
all
you
of the hot
add.
air
Use
we've
code
seen
RUMBLE
on
at
Twitter.
checkout and lock it in. This is your sign. Go to aimcontrollers.com and build that last controller you'll ever need. Right next to me, ladies and gentlemen, there's a QR code here. Lil Jizz, Fire Chicken, all you guys. Give that thing a click. Let our advertisers know that at least you're interested in what we talk about here. All the segments that are sponsored by these groups help us bring you this show, and having our audience, showing our advertisers that the audience is interactive here is very important. So go to aimcontrollers.com and build the last controller you'll ever need. Thank you to AIM Controllers for sponsoring this segment
in
of the show.
between Jackson Hole, August 22nd. And Bob, you've said repeatedly that maybe
Loving
Jackson
it.
Hole is the
Loving
opportunity
it. Loving
to
it.
have
Loving
a little
it.
bit
Loving
of a
it.
reset. Do you think that's still the case?
I think
Pedro
so.
should be on
I'm
here
still
shortly.
surprised that there were two dissents. Not
Looking
totally
forward to him
surprised,
coming on here, 'cause I
but
need a
would
break.
have thought with Jackson Hole a month away, you could have gotten Bowman back in the tent with everyone else and just gone with one dissent. That would have been okay.
Fed Governors Waller, as
very
expected,
important
and
historic
Bowman
Fed
dissented
Well, let's
in
get to the
favor of
nature
a
of that
rate
dissent.
cut.
Governor
Remember,
Waller articulated
for
this
those of you
pretty
out there,
clearly in his last speech. It was
especially
quite
those of you
literally
that
called
are
making a case to
supporters
cut
of the
interest
president,
rates. And in that speech, he talked about not just the labour market.
Jerome Powell doesn't actually control the rates. There's a committee, and that's why it's called FOMC, the Federal Open Market Committee.
Any increase would fade
And they vote,
over the next
and they
year or
vote
so.
on what to do.
What is it
Obviously, the
about that
chairman has
argument
big
this afternoon
influence
that's
on
just
it.
unconvincing to the rest of the community?
But all the other governors
I think
that are on the,
Diane
or all the other
actually
members of the
phrased it
committee
pretty well.
vote. And
We're
so when you hear the
all
president beating
expecting
up
some
Mr.
level
Powell,
of
because he's the one
stagflation
holding it
in
back,
the
he's
second
actually
half
just
of the
one
year,
vote of many.
But we don't know the magnitude or shape of it. We
And
don't know
two
if it's
people
going to be
dissented,
more
Governor
stag
Waller and
than
Governor
inflation
Bowman. And you
or
heard
more
Governor
inflation
Waller come
than
out and say,
stag.
in fact,
And
he caused
until you see
a big
why
boom
go
in the
ahead
market
and start changing
last
monetary
month
policy
when
now.
Governor
You've got
Waller came out and
corporate
said, no,
tobacco
we need a
kind
rate
of
cut.
where you want them. They've paused. They look healthy. When we look at
And Mr. Mr. Trump was like, see, I told you we need a rate cut. There's dissent. We got to get Powell out of there and get the new guy in. They can get a new guy in, but the other people are still going to vote the way they are. So it's not easy for the president to hack the court, as they say here.
Guessing 3 to 4 steps ahead to bring rates down today just doesn't make sense to me.
Aditya Bhavev, Bank of America, agrees with you. He joins us now. Aditya, welcome to the program.
But thank you to everybody watching on Rumble, YouTube, and X. Appreciate it. Appreciate it. Pedro will be here shortly, and we're going to have a Rumble Premium session here talking about stuff.
Ultimately just reinforces your view.
Good afternoon. Thank you for having me on. So I think at the core of our view is what's going on with inflation, and there's this endless debate about the effect of tariffs. But let's not forget what underlying inflation is. This does not get talked about enough. In the last 18 quarters since 2021, how many times have we been below 2% Q-over-Q annualized on the core?
All right, well, let's go back to
in the last 18 quarters,
back to the old markets here and see how we're standing. We're a half hour, just coming up on a half hour after, or 23 minutes after the announcement.
For us is stuck at 2.5%. So even
this is the Nasdaq here.
Still, really aren't that big a deal.
Really, no influence on the.
And I think the Fed is not.
Well, we're going to be wanting to see what Mr. Powell's.
Look at, for say, housing, which is a huge component.
Talk has to say. The Fed did say that inflation remains somewhat elevated.
Number of jurisdictions around the United States. What's to say?
Just like my blood pressure and cholesterol level.
Price pop in particularly consumer goods that will fade, and you also will have disinflationary forces coming down the pike.
Well, just if you're still listening, when I was talking about mindset, what I determined that I needed to do to be of the mindset was to be in control of all the factors in my life, including
before the pandemic. That would take about 20 basis points,
including my health. And so I started getting up at 6:30 in the morning to be ready for the 7 a.m. trading session.
So I still think
Mrs. Striking, my wife, Mrs. Striking, her job doesn't start until about 10 o'clock every day, so we would sleep in, get up at 8:30 or so, or 9. And that doesn't work because the market's already most of the way over for the day, for that trading period. So I changed when I get up in the morning, which means you change when you go to bed at night. And I also started working out while sitting here at the old crypto desk, either here at the Chicago office, headquarters, or in the Ottawa, Ontario office.
Political environment for the Fed.
I'll sit at the desk, drop down, push-ups, weights, all this type of stuff. Changing my body. Mrs. Striking loves it too. Feeling better, eating better, all this type of stuff. Drink way less, and then I go to the doctor for my physical, and they're like, nah, it's the same.
There would very likely be
cholesterol's still high, blood pressure's still high.
There were 7 FOMC members who did not want to cut rates at all this year in June. Right, and I would say that the balance of data since then has been hawkish.
So anyway,
what's the 10-year going to do
side story.
the rest of the year? You take the summation of what we've blended.
Jackhammer's getting ready to get started again.
What's the 10-year yield going to do for the rest of the year?
When in doubt.
But as we can see with Nasdaq, nothing really happened as a result of the rate change, lack of rate change. Bitcoin also just hanging out there. We are on the 5-minute chart here. A little downward pressure right now, but
where you are
great
today.
Things insignificant. Still trading in this
housing because of that. And I know the housing market has slowed down a lot. But imagine if you had a normally shaped yield curve once the Fed paused cutting rates, and you were up over 5% on the 10-year where mortgage rates would be.
We have parts of America where it is.
Yes, it's something I've seen the days that I do most of workout is when I get good sleep, and when I get good sleep, I have a great day, and it becomes a great loop. You know what? That's the best way to say it. It's like a self-fulfilling prophecy. The loop is really good. The greatness loop. I'm going to write that.
What will be that greatness in the December meeting? It'll be historic.
I think what we're going to see is the effective tariff rate settle closer to 20%.
Let's see here. Let me go find
15%.
So back to 1933 or even further back.
Let me go find
and a few months ago, we were in that 10 to 15% effective tariff rate. Now we're in the 18 to 20%. That is going to hit corporate America. It is going to hit pricing to the consumer. There will be some pullback on spending, and corporate America will respond to that doing what they always do, reduce their flexible cost, which is labor. So I think all of that is yet to come, and that's what the Fed will be responding to.
Go follow. And thanks for watching us on Rumble. I appreciate it. I don't know if you found us on Rumble or found us on YouTube and then came over to Rumble. But we moved as our primary broadcast place from Rumble, from YouTube to Rumble. Now we just simulcast on YouTube because YouTube's been downrating crypto and digital asset
I think that is much more important. What happens with the headline will be a function
even the people
of
that have massive communities
state and local
getting down here. I'm going to drop a link here.
In June, right? So set that aside. 85,000 on private. It's still a little bit below consensus, but it's an acceleration relative to June. And most importantly, the unemployment rate. Where will that land? We have that at 4.2%. That's what tells you what the balance is between supply and demand in the labor market. 4.2
follow this guy
I think is just fine from the Fed's perspective.
On Twitter.
If you go to 4.3 or higher,
and go to his YouTube page.
We'll let you run. We'll let you get back to it. Appreciate it.
And he's got a playlist on it. One of the playlists includes the money printer model. And it's a great way to get started with a good solid model that you can easily watch develop and recognize. It's not complicated.
Economists, including two Fed governors,
it mimics,
calling for that to happen right now.
In fact,
what is the concern about some sort of tariff-related inflation making it that much more difficult in September, even if, in the longer term, this is a one-time price shock?
Aren't we all expecting that? Firmer goods prices through the next several months.
The key will be, what is the consumer tolerance to that? If you see weakening and sort of the stag and inflation that Bob was talking about,
this is essentially the money printer model. You see a big liquidity sweep here, this big down red area here. That's the market makers and institutions and stuff dropping the price to clear out stops that are in there in order so they can rebuy in and get better prices down here in an area where they've seen lots of orders.
On price.
And what happens is during big drops like that, this is not a great version of it.
And then how businesses respond to that, either consistent demand or
what generally happens is that a liquidity sweep comes down, reaches a level after clearing out stops and FOMO panic sellers get involved too. It reaches a level where it stabilizes and then starts to go back up. And that's the trick. That's the trick because there's a retracement. And it starts to go back up. People FOMO into that, like, oh, we're going to get the reversal, and then it comes back down, cleaning them out too. And then it goes on for a nice rise in price. And if you've learned to use Fibonacci's yet, this falls into the 786 line of Fibonacci's. It's very predictable. When it hits that, it's generally going to reverse and go back up.
The impact from tariffs on inflation will be
that money printer model happens at some point almost every day.
Start bringing rates down. 25 basis
in
points
the 7 to 12 a.m. 7 a.m. to 12 p.m. time frame. Maybe not as grand as this one, and maybe not on this time scale, maybe on the 1 hour time scale, maybe on the 1 minute time scale. But every day it happens, and if you can recognize it, you can use it to your advantage.
Consumer tolerance to it for quite a while. Well, that kind of sets up a chicken and an egg, and you don't get either of them in time.
Bob Michael should be. He's
a great. He is a great trader coach because he is not.
Tariff rate.
Not
that
someone
changes this entire dialogue.
That is like all these influencers. He doesn't give a shit about being an influencer or anything like that. Doesn't even show his face on his YouTube channel. Most of his YouTube videos are unlisted, and that he only gives them to his trading community. But he has a bunch of public ones in which, and you can interact with him on Twitter too. All right, here comes Powell. Let's see right here.
Squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending.
He means tariffs.
In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
Services are inflating faster
our
than
monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell.
That was a great,
there's a lot of lean in the markets,
short, succinct
not
thing.
to mention out of the administration for a rate cut
Consistent
now in
with full
September.
employment, meaning that the economy
is expectation unrealistic at this point?
is full of employment.
As you know, today we
means
decided to leave our policy rate where it's been, which where I would characterize as modestly restrictive.
But that's an inflationary thing too.
Inflation is running a bit above 2%.
When everybody has
even excluding
a job,
tariff effects,
everyone has money,
the labor market
everyone's
is solid,
buying things,
historically
and
low
that's inflation.
unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve. Surprised that's news.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So, at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again.
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil. Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Little jizz.
Thank you.
Here's a good example. I've got the Nasdaq up here, and Bitcoin
today,
will
and I'm wondering
be very
what
similar
of their
too.
argument
And that's why I said,
compelling to you,
after these FOMC announcements, wait a half hour at least
on the committee, who, as of the June forecast, were
before
in the
doing
camp
anything
of the
to
Fed
see how the market
holding
sorts
interest
itself
rates
out. Because in the last 10 minutes, we've seen it drop off here.
And just in
Nasdaq
terms
is
of the
down.
June SEP in particular,
It's just getting
is
volatile.
that still the best representation of where the core of the committee
Where
is?
is the volume for that?
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target.
So you have to let
the
market makers do their thing after these. You got to let the FOMO people get in and out of the market, and then you can
for now
figure out the trend.
But
and if you look at the trend on Nasdaq,
I think you want that clear thinking and expression.
Look at the trend on Nasdaq. You can look at the 1 hour
table. In terms of you asked about the June SEP.
The trend is up.
That you're right. That's what it says. And that may well. I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that we haven't made any decisions about September.
The 1 hour chart, the Nasdaq's going up. If you look at the 1 day chart,
and asking ourselves whether the federal funds rate is in the right place.
The trend is up. Remember, never trade against the trend unless it's very short term.
Does that mean that there's actually
very
not
short
much
term.
scope to reduce rates once the conditions for
1 day
are met, barring a
4 hour
weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a
we
range
just
of
did the
views
1
of
hour,
what the
30-minute
rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even.
30-minute, while highly volatile, is still
going to be
overall up
at some
trend.
point when we return to moving toward a more neutral
15
stance.
minutes, starting to
we'll be
level out a
making
little
that
bit here,
judgment
but
as we go. I don't think we have a preset course.
Still,
it's
the
not
trend
so
is
mechanical
generally
as
up
saying,
here.
As
you can see,
we've derived with great
5 minute
confidence
chart,
the neutral rate, and that is our destination.
5 minute
because
chart,
really,
a little
we
less
understand that
predictable
no one
here. I
actually
mean,
knows
5
what
minute
the
chart in
neutral
the
rate
past.
is. We know it by its works.
Past
And
day,
that will be
24
how the way
hours
the
is
economy
definitely up.
reacts over time.
And then the 1 minute, we'll see is all over the place here.
Slightly looser policy.
Bitcoin.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time.
Because if they don't buy them, the companies
I think we've
can't
learned
pass
that the process will probably be slower than expected at the beginning. But
you can see Bitcoin selling off here. Now this is the 3-minute time frame here. So this is by no means, and if you're on a long-term trade, by no means any sort of movement at all. And this blue line at the bottom here is the bottom of the range that it's been trading. And the other blue line's at the top of the range it's been trading for the past 10 days. And so I wouldn't mind it coming down all the way to this blue line, because then the bet, essentially the bet would be that it would come back up here and keep trading in this range.
I wouldn't insist upon that, but I don't think. I think the base case.
Pedro should be here now.
The reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though. And that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But
Brando Commando, welcome to the show. Thanks for joining us. Really appreciate it. Too slow, Powell.
Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government.
Did you guys just hear a thunderclap?
Of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Interesting.
Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work. And I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%.
Ladies and gentlemen,
there are things like the catch-up inflation. So, for example, all the insurance costs that are they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation, but the composition, as I mentioned, has really changed.
Manufacturing is running higher.
And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we have restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
The other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorize spending as the administration proposed?
I'm not going to comment on the administration's proposal. I do think, as I said, I think that we're getting the data that we need to do our jobs.
And only some people will be successful.
And I think it's really important that good data helps not just the Fed, it helps the government, but also helps the private sector.
Just remember the Fed has two roles to support maximum employment.
They use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy, and the United States has been a leader in that.
And that was kind of what I said earlier for you little jizz. What I said is if he comes on and say everything's great, but it's not
thank you, Mr. Chairman.
growing too quickly, if it's just kind of
how concerned are you with the data that we're showing coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
People are just closing out their positions.
How concerned am I that the
wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy is restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean, That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed rate.
Brando
Something we don't have
maybe Trump
any
doesn't
effect.
want him
We
to
do
lower
have
the
an
rates.
effect,
If
but
he
we're
did,
not
he would
the main effect.
say not to lower it, and then
There are
Powell
other things
will lower it.
going
That's
on
probably
in
what's
the
going to happen. By
housing
the time
sector,
Powell
and
gets,
one of those is just as kind of a long-term housing shortage that we have. We haven't built enough housing.
Conclusion that they need
This is
to
not
lower
something
the
the
rates.
Fed can help
That's
with,
when Trump will
and
say,
that'll
let's
be
leave
the
them
case
where
even
they're
after
right
things
now. They're fine.
normalize. So I think the best thing that we can do for housing is to have 2% inflation
Powell doesn't
and
set
maximum
the rate.
employment.
The open market committee
And
does.
that's what we can contribute to housing.
Waller,
There are lots of
Bowman,
other jobs to do for the private sector and Congress, but that's what we're trying to get to.
There's
We've
always
made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
A little bit on the short term here. If you zoom out, it's barely even a movement on it. But it's a good opportunity.
Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation
out of the
back
market until well
nearly
after
to target?
the announcement?
Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused,
in my ear, ladies and gentlemen,
inflation was
a network connection.
Was above target, and the labor market was pretty good. So that was a time when policy was restrictive when we paused, and to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example,
here we go.
Some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down
I think
closer to 2?
We'll look at everything. It's as I mentioned, a pretty reasonable base case is that this will be a one-time price increase.
It's dumping like
crazy.
And
in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't. Again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right. And that's effectively what we're doing.
Claire Jones, Financial Times.
One could assume it's always a good time to buy every time Powell gives a press conference.
We've seen it decline quite
30 minutes
heavily
after he
this year.
speaks,
I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target.
How many people
so this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury
today no change
only
at the top of the hour at 2 p.m. Eastern time
to the
when
dollar.
the number is released. there are people trading.
It's not something that's been a topic
as I was telling little Jizz earlier,
major discussion at all.
You should stay out of the market
at the Fed. I won't say it doesn't come up
until 30 minutes
transcripts
after
when they come out in a few years. They'll probably reflect some mentions of the dollar, but it would never be a major focus.
Hold on, Pedro.
And just to follow on, if I may, to
obviously,
Andrew's
if you're
question,
chasing a reversal,
I think
that's your strategy.
The amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on in order to just ensure you've got a good read on what's happening to prices in the US economy?
You gotta wait because because the markets
so we're
do
monitoring the
strange things for a
situation.
little while.
We do, of course, as you know, during the pandemic, we
trust me, the big players want to use these events to take your money.
People are looking at big data sets that you can get from
they view each
all
one of these
sorts of
events
places,
as a
and
money grabbing
we do all
event.
of that, but at the same
you don't want to
really
be
need
have your
the
money
government
out
data
on your
really
hand,
is
holding
the
it up
gold
for them.
standard in data, and we need it to be good and be able to rely on it. And,
Brando Commando, we're
not going to be able to substitute.
Jizz. I don't know how to
that,
pronounce it. I guess
we have to make do with what we have, but I certainly hope that we get.
Pedro's in my broadcast monitor here. I think his little Jizz. New viewer on Rumble. Asking a lot of questions.
Mr. Chairman, Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected.
Sorry, guys,
if
I let
it
a little
didn't serve the
spam
public
get
well,
through there.
then
it
wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions.
This is good. I'm liking this.
And the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for
example. The futures market,
and that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Moving lower than the spot price, the futures market is predicting that the price will be going down. Spot price will be coming down further.
Afternoon, Sir Powell. Maria Luisa Capurro
from
the
corollary is true.
You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
They show
consumer spending has been very strong for the last couple of years,
pointing up,
and
showing that it is
repeatedly forecasters, not just us, had been forecasting it would slow down.
Things that are
and now maybe it finally has.
Green.
So, I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape, and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are
Nasdaq and
not a
S&P
problem.
500 selling off.
High-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was again right in line with what we expected. The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting.
Like that would be
some of that can be affected by consumer spending as well. Look, it's one of the data points that we pay most careful attention to.
Share a similar bottom.
And there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this dissent, Governor Waller said that the labor market is on
WIC
edge,
included,
and
or
he was
just
pointing
body?
to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
That's a 20.
So,
that's a 22.
I'm not going to talk about any individuals, any individual's comments. I wouldn't do that. But look, I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So that's it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment.
All right, viewers, I'm going to ask you a technical question here.
They haven't really moved
Pedro is
in a full
using
year.
NordVPN.
So I think if you take the totality of the labor market data, you've got a solid labor market.
Needing to get out of
but
the
I think
United
you have
States
to see
for
that
some
there are
crypto
downside risks.
things.
It's not, you don't see weakening in the labor market.
And
but,
when he turns off NordVPN, he just installed it, but when he turns it off, he still can't get to the internet.
Held down because both demand and supply are declining.
There's an option called the kill switch. Is that kill switch
paying close attention to
something that when you use that, it just doesn't let your computer access the internet unless the VPN is on? And how do you disable that?
Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So we have an economic go around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy was the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express.
All right, for those of you watching this, especially you little Jizz, where you were waiting until all this settled down to get back in the market.
That's the story.
This is the time we've had the big liquidity sweep here. You see from the chart behind me that
good arguments.
This is a 1 minute chart that we have just a few candles here. 3 minutes.
Unusual situation.
Of going back up.
Good shape.
This is a time not to trade.
It's an unusual situation.
Unless you are an expert.
Risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock.
And so
it's probably not surprising.
Just wait a few minutes.
Differences.
If you don't get the exact bottom, that's fine. Wait, see if it retraces a little bit more, or if it was a false move and then they dump it another 100 points or 1,000 points or something.
We have those. I will say what you hope is
this is the time for patience.
Explain their
because if it's going to come back
very thoughtfully and clearly, and we absolutely had that today, all the way around the table.
You don't need to be at the exact bottom, or as Pedro
from that
says.
standpoint.
And you said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I say that's why we think policy should be restricted.
Remember, you're talking to me, not to the audience.
Inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation.
I got Pedro in my ear,
ladies and
gentlemen.
That means policy should
troubleshooting his network connection, and then all of a sudden he starts commenting as if his mic is through.
That would imply that
through the
policy shouldn't
phone
be restrictive. It should be
into the system
more
here, which I could probably figure out somehow.
A neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where.
But anyway,
that's the
sure enough,
there's I'd be taking
on the chart here. Bitcoin, the little 3-minute rise ahead.
We're going to be
sold off.
Looking at a lot of data.
Likely
in the next cycle. It is one of the cycles where we have two
chill here for a minute
inflation reports,
or reverse.
We'll see where that takes us.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondered if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases.
We're getting a little far into this meeting. I don't think
was 1.6 on the first half.
We need to keep listening to it. We got the basics out for this.
GDP, I believe, was 1.2%.
Which are the important things were.
So those are slower, but GDP.
But the economy's doing okay.
Quarter to quarter.
Employment's doing okay.
Half to half.
There's a potential for tariff impact on inflation, but it's not being seen yet because of what's going on.
Data we have on the economy, and that shows a 4.1% unemployment rate.
It shows market's starting to see what's going to happen here with the Bitcoin.
Level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to.
Interestingly, the spot market now. Futures price is above the spot market. So it's reversed itself in the past 2 minutes. There, Pedro is coming on here. I can't hear him yet, but he is talking. Let me adjust my sound here, Pedro.
If sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it would be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that.
Ladies and gentlemen, Pedro Garcia. You got his sound. His picture will be up in a minute as he gets something going on.
The inflation data and employment.
Can they hear me?
And we're going to make.
Yeah, your microphone's on, Pedro.
The data and based on the balance of risks analysis.
Oh, it's going to be. Sorry. Tom knows my antics. I like to play. Sometimes, so where Tom's at in his Chicago, he's got large speakers all over the place. And so sometimes I'll just come in while he's just chilling, and I'll just sing some weird song that's been singing in my head, and I know it just echoes throughout his whole entire studio. But I was gonna make sure that Mrs. Striking's not there, so that
any update for you.
Yeah, when I get the broadcast studio up and running. When I'm walking around, I have it over the speakers, listening to whatever's on the computer, and for Pedro's connection coming in. And up above here, I have these big speakers on the roof, like at a restaurant or something like that. And they're all over the place in the apartment. So as soon as Pedro's mic comes on, I hear. Or Ave Maria, or some beatboxing or something like that, and it echoes through the whole apartment. Exactly.
We're like, dude, we're here for your freaking TA. We don't care about anything else. Keep your mouth shut.
Chairman Powell has a different view of things. Take a listen.
All right, can you guys see my?
Let's bring Pedro Cam on here, and that should do it there. Oh, I gotta hold on. I gotta fix
it's things like.
Dude, I just got done moving a freaking apartment, bro. Just so you all know, I had a buddy of mine. The reason why I had to jam out is I have a friend of mine where we have a mutual friend, and he called me up and said, hey, so-and-so needs to move his stuff because he's basically kind of disabled, and he can't just move things for himself. So long story short, I was there to help him out to make sure that, and this was kind of last minute. And so I said, well, why didn't he let us know? And they're like, well, hey, that's part of the deal. And I said, well, who cares if he's disabled? You know what I'm saying? I got a show I got to do.
Screw that guy.
No, whatever, dog. Like, what? Just because you can't lift things and you literally have a TBI and you forget where you live?
I forget where you live.
I'm not joking, dog. He'll be like, we'll be hanging out, and maybe he's like, bro, I don't live there. I'm like, I know, bro. It's all good. We're just going to go to my place. And I'm like, okay. And then he'll pull in. He'll be like, oh, this is my place. Yeah. And I'll be like, it's all good. Like legit. It is the coolest thing in the world. You can remember old stuff, man, but anything from like a few years back, he's getting some of his memory back. He writes everything down. If you've ever seen 50 First Dates with Adam Sandler, speaking of Adam Sandler, I am so fiending, bro. He went to the doctor, and so we were checking some stuff out, and while we were doing stuff, and found out like there's some people were talking about the new Adam Sandler movie, and they were talking. I was like, "Shut up, get away! I don't want to hear it." Like, and they were like, "Oh, you heard?" And I was like, "I heard it's good." They're like, "Yeah, it's so freaking good, man." They're like. And exactly what you said, they use a lot of the old stuff, but then but they brought in a bunch of new stuff, which just makes it better. So it's just like, I'm like, don't tell me. I was like running away. Like, don't talk to me.
Netflix, earlier as it was announced, Netflix announced that 42 million streams.
Wow.
With an estimate of 80 million people have watched Happy Gilmore 2 now.
If it's good, it's good, dude. Like, you can't, like, that's just part of if it's good, it's good. Let's go. Oh, did you talk about Fire Chicken's explosion that they've been seeing?
I did talk. Chuck was on here earlier, gave us a nice Rumble rant.
Let's go, baby. We need to get him to come on and just talk. We like what Fire Chicken is doing with their education initiative, with teaching people about crypto, the safe things, the scary things. They're doing a great job with what they're building. And so I just think what Chuck is doing there is phenomenal. And I mean, I think with the community really backing it, I just think the coin's will get up and go. And he's made some really good strategic partnerships, which is really good. All right, that should work. Okay, I can see me there. We are good. Oh, one last little thing. Boom, 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 boom. All right, that's
ladies
done.
and gentlemen, for those of you
Let's
watching,
go.
Pedro and I are going to talk for a few minutes on this stream here. Catch up on a few things that you guys want to hear about, what's going on with Bitcoin, and obviously the market's roiling itself right now. And then we're going to switch to a Rumble Premium members only for our Rumble Premium creator session that we need to do. For those of you Rumble Premium members, if you're on the stream, it'll just continue right on. For those of you who are not Rumble Premium members, you'll get a message that says, please subscribe to continue viewing in a premium only. We don't do this often, but we have to have 5 hours per month of Rumble Premium to stay in their creator program. We've only got an hour and a half in there, and there's 2 days left in the month. So we gotta
get it done.
Gotta knock it out.
And so we're going to be doing 4 hours of news and just gaffes and fun. Tom's like, yeah, I got to be with this guy here with the long hair, big nose, fat man. Not so much anymore. I'm getting the yokes, bro. Getting the yokes. Saying what's up. Yo, I think I was hitting on a girl today she's absolutely beautiful. And like legit, I hope she has a following. I hope she talks about us and comes and finds me, bro. Like, I was like, this.
She was helping you move the disabled person's furniture.
No. We had to take him to the doctor real quick for some stuff, and so that's what I was saying. It was going to take a while longer than what I thought, because the moving was all of a sudden, and then he can't just stop his stay right? Because he has to go to these doctor situations and take care of things. And so like, I was like, man, you guys are killing me, bro. And he's like, well, I don't know what to tell you, but we got to. So I said, all right, cool. So as we was waiting, I saw this, what was it? Maybe 25, 26. I don't even care the age. Really what I thought was, this girl's so beautiful. There's no way that she's not a YouTuber or some sort of person like this. Like I literally, like I was like, because she was just the way she actually, like I could tell, you know, like YouTubers, KOLs have a way of talking and
right.
the way they look at people. We stand out. Like I've noticed a few of us now, like even at the mall, I'm like, that dude's a KOL. Look how he's looking. Because we always in front of the camera. And so like they're more, you can tell because they're conscious of the way they're looking, the way like what I do with my hands, what do I do with my hands, you know, that type of movement. So they're always conscious of it. And I was sitting there and I was like, this person, I gotta hit on this chick. I hope she talks about me. Like it was, and then hopefully somebody goes, oh, that's Pedro. He's got a YouTube show. He's the creeper. And then
you are fake news.
We're going viral, baby. Like hopefully like Joe Rogan, where like they just lambast us. But dude, like Joe Rogan says that when like every person who's
Jesus
ever been
Christ,
like really put to the grinder like that, they always get way more subs. Like way more subs, and they get more followers. So my hope is like one of these days, like we can get like, you know, I know it sounds bad, but I'm trying to use the internet for what it's best for. You know what I'm saying? Instead of being afraid of it, use it. Sorry.
Little Jizz says, you think that long is coming? Well, you're in an area in which the price has come up above the 200 period moving average. You want to see where the 8 period and the 20 period moving averages are here for sure. Those are not on my chart for some reason.
Well, the primary thing, the reason why I say this is, so let's look at Bitcoin, because we've talked about this now for a minute, right? We've been talking about how it needs to come and take the lows out here, and need to see what's happening. So you can see here, we've got a few lows sitting right here. What's up, little Jizz? Am I saying it right? If I'm not saying it right, please correct me.
I already said that, Pedro. I've been on for 2 hours. I've probably said everything.
Do you think?
I know. I asked, and he didn't correct us, or she, or whomever.
Gets.
All right, I gotta make a phone call, Pedro. I'll be back here in a second. Just remember, I've already gone through all of the comments as they've come in. Yeah, little Jizz.
Like a G.
Like a G thing.
Like a G, like a G thing, baby. Too low, going crazy. What up, dude? Well, glad to have you, my brother. We're about to go over some charts, have a little fun to funds, have a good time. How'd you find us? Talk to me, Goose. I'm Tom's sidekick over here, or maybe he's my sidekick. I don't know what it is. We're both kind of each other's sidekicks because we both are kind of that yin and yang. Like I'm the yin, he's the yang, and sometimes he's the yin and I'm the yang. So it's kind of like a my kung fu is stronger than your kung fu for now. All right, so this is the reason why. So we've been talking about this kind of fall here for a while. I need feedback on the Fed. All right, cool. Let's check this out. So the Fed right now, yesterday, if you go back and you look, I expect to fall. They're going to keep talking trash this week. So today, I'm going to go check out really what's going on with a lot of the numbers and find out really if like job numbers are real job numbers, right, that are actually being created, or are these, again, like last month, we saw it more from an actual government stance, right, where we saw local municipalities, actually teachers hiring and not actual real private jobs. And this is my biggest thing that I keep harping on. It's just that, just like with the Biden administration, it's a bunch of BS. So the reason why I'm bringing this up is let's look at Bitcoin. One of our plays that we play here is we want to see it kind of come down to an area of illiquidity, right? So let's pull this up here real quick. And you're like, what do you mean illiquidity? Well, there's two spots in the market that I expect market moves to happen. One being an area of liquidity where there's a lot of stops. Two is going to be an area of illiquidity, meaning that when there's no buyers and sellers sitting there, okay, they have to create buyers or sellers based off the direction that the market is going. And so what they'll do is they'll cause the market to stop, create an actual position, and then people will then go long or short there based off wherever it's at in the market. I'm going to display this because this is what's happening right now. And we're going to go into this. This is a 4-hour period just to make sure I'm on the correct time. I didn't switch me back. Okay, we are in New York. So that's 12. All right, pop. We got that 11. So 3 o'clock. This is the London low here. And then we have the New York low at the 12 o'clock. So this area right here. So this is where I'm looking. We're still showing weakness here. Let me pop in here real quick. 4-hour weakness. 2-hour weakness. Because my internet is not correct right now. I don't have my other actual trading charts up. I need feedback on the Fed. Now, what are you looking for feedback in particular? Like, what is it that you're actually looking at? What do you mean? Like from a trading standpoint, from an actual, like, I need to know so I can feed you the information that you're looking for. Because I can ramble on, and if it ain't what you are looking for, then it's annoying. Came back, I come back. I think that's long. I think that long is coming. Absolutely. Okay. So you think the long is coming in. All right. So what you're looking to see is an increase in volume. So one of the things that I look for is I want to see you get above
Pedro,
the 8
little
moving.
Jizz is a brand new trader.
Okay.
Right. And so a lot of these concepts, he's just learning.
He's not going to get on a good
you may
direction.
be on mute.
I'm on mute. All right, on a good
sorry.
direction. All right.
Just me.
All right, boom, on a good direction. Keep going. I like it. All right, I like it like it's hot. Like a big booty, smart, brilliant white girl walking through the ghetto. All right, boom. There we go. There we go. I think this is the one that I had up on my charts here. Okay, I gotta do this here real quick. So that's gonna be the 12. It's the 11. 11. Boom, pop up. Went down, went up, came through. Okay.
Yo, is Pedro on Adderall?
No, but I probably
but he's on lots of natural, holistic versions of that type of stuff. He's got a potion for everything.
Everything in your mama's.
Pedro is very energy focused, and there's some days when the man has no energy, and there's some days when he's got lots of it. And today's one of those days he's been moving furniture and moving stuff, so he's got the blood flow going. Got lots of it today.
And I do a lot of things so that because it's very hard to stay focused on the market for long periods of time. So you've got to be, I hate to say it, you need enhancements. I hate to use that word, but it's just the honest to God truth. Okay, 1, 2, 1, 2. All right, so this is what we're going to do. So what we're looking for is we're looking for volume to get above this area right here. You have a liquidity for, so you have two areas here that we can see turnarounds here in. One being this area right here. You've got this area sitting at 15,820 to the 15,560. This area here is really important to understand is on the BTC USD chart for the Bifinex. But what I'm looking at is going to be yesterday's, or not yesterday's, is this yesterday? On Fridays, around last week's Friday lows here, okay? This area here, and you're gonna see this on the 1 hour chart is what I'm looking at. Come on, dude, don't be a douche. And when I was a kid, they did give me Ritalin and all this other crap. But I got off of it because it made me into a drone, an automaton, and I couldn't think. So I got off the Ritalin. And from that moment on, it was been a struggle for me to stay focused, but I'd rather figure out a way to do it myself than be on all that stuff, because I would have been on it from, who knows, from what age to what age. I probably would still have been on it. All right, so you can see here, this is what I'm looking at. This is what you're trying. This is going to be Friday or Thursday into Friday morning. It's going to be that 12 o'clock 1 hour zone sitting right here. Okay, so I'm looking between, honestly, the 115,820 to the 114,800. So it's about 1,000 points is what I'm looking at. So make sure your risk to reward ratio and your risk that you risk encompasses that large zone there, right? Don't sit there and don't put $1,000 a position on that zone if you cannot handle it with your portfolio. Okay, if $1,000 is way too much and it would drain you, do not do it. Make sure that you're looking for a stop, and your stop is going to hover underneath this low area of that 14, or excuse me, the one. When I say 14, I mean 114 area. Okay, so I hate saying the 1,014. So the 14,800 area is where I'm looking to put my stop underneath, and around this whole entire area, I'm looking to take a long. So you do have the right mindset to look. Now, what you want to make sure and see is if we may not get down there to that level. So what you want to gauge, I got Adderall. Wait, I was on Ritalin too, Pedro. Short buses unite, baby. Let's go, special ed. All right, there we go. So when it hits that spot, how much
short buses unite. A little jizz, I am of Irish Catholic heritage.
Herlihy?
Yeah, last name Herlihy. Family names O'Gara, Fitzgerald, O'Shea.
I don't know, man. I think it's something like Hernandez. You know, you could be, I think, or maybe Jones. You could be Jones. You got the attitude of a black man, that's for sure.
Little Jizz, he asks a question that we can't really answer. So when it hits that spot, how much should I leverage the long?
Yeah, I can't do that. So
he can't explain
what he should do. This is all right. So I cannot give you that. So I cannot give you exactly what you need to do here. But what a smart trader should do, and you need to go research this. It's very important. Okay. What majority of the time is you're going to, if I am trading, and let's say I have $100 in that account, I'm going to partition $10 for the trade. So I'm going to risk $10 or $1. I would first tell you risk $1 first and make your risk 10 cents. So I have $100. Okay. I'm going to take $1 out of that $100, and I am going to put that on the line. Okay? I'm going to put that at risk. My stop, okay? I'm waiting for this to come down into this area, or what I'm also going to talk about is playing off of that. Once you get above the 8-period moving average with higher volume, you can also sit there. And what you want to do is you sit there and say, I'm going to go in with that $1 out of that $100, right? And then from there, I'm going to put my stop. I'm going to risk 10 cents from here down here, okay? So I come in and my risk is going to be right here. My low is going to be right here, right? My stop is going to be right here, and I'm looking to get in. And I'm looking pretty much for my first trade to be a 1-to-1. So I enter right here. And from here to here, I would sit there and say, okay, I'm looking to make 10 cents right there. Okay. Now, Tom, I haven't traded really futures with this. How much do you need to leverage to be able to pull out? So if I leverage $1, right? Then I can put a stop at the 10 cents, right? Because you have to ante up. How much do you need to?
Your stop needs to be where your risk is. You use leverage to build your. this is a complicated topic that needs to be explained, right? And it's an hour-long show in itself. But little Jizz, stick with us for a couple of days and you'll get it. Leverage is used to take what you have and meet the needs of the position for the trade you want.
Yes and no. So yes, risk 1%. You got it right. So risk 1% to make 1%. But here's the thing: you're going to take out that 1%. You're going to take off 70% of that. And the reason why I say this is because you'll win a lot. You're going to win a lot here. You know, I'm just being honest. Like, you'll win a lot. I don't know how you found us or whatever, but here's the thing: I believe in compound interest, and if you can let that money sit and just take good trades, then it will grow compoundly. It will grow in a compound area. What's up, Dr. Fried Chicken? It's good to see you. I will stick here. Dope. I'm glad to have you, my dog. Keep a gangster. All right, so the most important part here is this, is that when you have that 1-to-1 ratio, right, you're going to take off 70%. Then your second position, right, which will be you take off 60 to 70% of that first initial trade. Okay, then if it continues up, right, you go to 2-to-1, right, and now what's left in that trade is either 30 to 40% of the original trade. You're going to try to let that second one run 2-to-1, and then you're going to try to get a 3-to-1. All right. But the key point is that when you risk it, you want to go through and you want to make sure you take off 60 to 70% of that trade. I have to call. Guys, this is so complete. Yep. All right. So this is really important here. Because you're a new trader, again, I am not giving you financial advice here. This is not financial advice. This is simply just you learning this is how I trade. This is how I make my money. But again, you need to do your own research and your own system. Okay? I'm just telling you what I do. All right. What are you saying here? So, okay, what price is it a good entry? I'm not going to tell you the good entry. I'm going to tell you what I look for. Okay? I can't give you direct entry point because, again, that is financial advice. But I'm looking where I'm telling you what I'm be looking for is this is the setup for myself. I wait for us to get to an area that I think where liquidity is sitting. I think the liquidity is down at that 15.8 to 14.8. Okay, so 30%, I should sell 15%. Yeah, exactly. And wait till the 15% goes to a 4-to-1. If you want to, yeah. I like quick bucks. Boom, give me my money. I can bounce like it's hot, right? I can bounce like a red ball on a playground, right? Bring, bring, bring. Gets going. You can boot it, right? So I'm looking just to make that quick cash for myself on these type of trades because, again, the trade, and this is the other part. You got to be comfortable with you developing your own trade. So I'm going to also say to you, do you currently right now have a trading journal? Take your camera odds and the price off. Or take your camera off the price. Ah, I see. Yeah, I got you. All right, cool. Tom, you good? You can. Yo, you there, Tom? Tom is.
Yeah, sorry, I'm trying to get a hold of this.
All right. Take your camera odds. Okay, so I can see the price. Got you. All right, so I'm going to tell you what I do, and again, this is not financial advice. Understand that. I'm telling you what I do. I look for a price to come down to an area I think we're going to see price move. Then what I look for is demand wicks. Demand wicks are one of those things that indicate that there is price that wants to hold in an area. either supply wicks or demand wicks, or I call them seller wicks or buyer wicks. The buyer wicks are the wicks on the bottom. Seller wicks are the seller wicks that are on the top here. Now, what I'm going to have you do is for every trade that you take, I need you to write down entry, stop, target, and the reason why you were getting in that trade. And this is very, very important, right? Because I want you to become, I want to teach you how to go out and fish for yourself. And I'll give you fish along the way. But most importantly, you need to learn how to, and if you come and say, give me a direct price, I will do it. I won't do it specifically for you. The reason why I don't want you, because I want you to be able to teach yourself. So that trading journal is going to help you start to understand what works for you and what doesn't work for you. And you're going to need to keep every trade you do, you need to write it down. The reason why, and in the beginning, this is going to slow you down as a trader, but it's going to speed up your learning curve. Understand this. If you take a bunch of quick trades to make money, you're going to slow down your learning curve in trading. But if you increase your learning curve by slowing down your trades and understanding the reason why you're getting into it, you will increase your trading ability. All right, boom, thanks. The 15.5, so I can see the price. All right, cool, thanks, you got it. All right, so this is what I look for. Now, for me, my trading style, I use moving averages. I use the 8, 20, 50, 89, 100, 200, and 400. Okay, these are all indicators for me that I use that lets me know that we're having price showing bearish or bullish sentiment. Now I use a couple other things like higher highs, higher lows, moving averages, like I said, and wicks. These are indicators that I use. I also don't stay on the 5 minute. I look typically at the daily zones. I look at my daily, my weekly, my monthly, my 3 month, my 6 month. You're like, Pedro, that is way too much. Well, I'm looking to catch long trades as well as short trades so that I can be a good trader. Okay, and so I use the 6 month, the 3 month. Like, think about it like this. Imagine getting in on the trade back in July of 23 as we saw it pull up here, right? Or we saw it come down to go up here for 6 months. Or imagine actually getting on a monthly trade when you see it bounce off of that 20 or that 8 period moving average on a monthly, and it's literally tapping the 8 period on the actual 3 month period. So I like using these larger time frames to get in at deep pullbacks, and then I go in and I fine tune my entry at these lower levels. Now again, these are long-term trades, but they play into my short-term trades. So we've talked about us on Bitcoin doing two things this month, either getting up to that 130 area, which we got close to the 122, and or I said pull back into these other liquidity areas. So I have zones that I use, and those zones basically say to me, these are where the buyers are sitting. And then liquidity pools are areas where there are stops that are sitting. And so the institutions, I feel, in my trading style, seek liquidity and illiquidity. So when the market comes down to an area where there is a bunch of stops, that is typically an area of illiquidity. There's a lot of stops there, but there's not necessarily a lot of real buyers there, right? And so they basically fill up, take your stop, and then continue in a direction. 10 minutes. 15. That's the entry. Thanks. Momo called me in back. Okay. I see on the liquidation map that everybody will get liquidated at 120. Exactly. A lot of people are shorting stupidly. Exactly. But look, this is really important to understand that you have not just liquidity points, but also that area. It's not just necessarily liquidity. These are also areas of buyers as well. So you can actually have liquidity area where they come and take stops, push back up a little, and then come back down, and then tap the buyers. So it's really important to understand the nuances between liquidity, illiquidity, and where buyers are sitting. That's 3 different types of mechanisms in the market that get triggered. And based off which ones they're trying to trigger will determine to you the real play in this market, or in that particular move that they're actually trying to accomplish. And also based off of where we're sitting at the beginning or at the end of the month. It's important to understand right now at the end of this month here, we are putting in, right? And we talked about this on Monday, right? That we were going to go up first, probably a little, but come back down. And I'm expecting them to hit these areas here of illiquidity to create liquidity for next month. Because they're establishing real orders here so they can come back down next month in the beginning of next week, which is a new month. That's going to come down and create that bottom wick like you see right here. Right? They're going to have to create that wick, right? And so remember, this thing went down first, then went up, right? In the same sense, we're going to see next month. And so what they're doing is they're pulling back. And I talked about it coming down to these lower levels, hitting the illiquidity to put the liquidity in. So next month, when they come in, they drop the market again. It's just a simple drop for them to get that area, get those orders, and then to continue it back up. So it's important to understand the nuances here. So when you go back and you look at the liquidity area on the heat map, go back, pull back and look at your chart on a monthly, a weekly, a daily, and I would say 4 hours. Okay? And go through and just look at it and you'll see it ping pong. I call it the ping pong period. A lot of people are shorting stupid. All right. Boom. So that's important to understand where we're sitting here. And right now we are pulling back. If you go look at our Monday video, our Monday and Tuesday video, I talk about what is happening right now. And so what I'm expecting us to do is come back down. I just put this here, right? Because today I had to do some stuff, or you guys, I would have marked this here for you guys. These are the areas that I'm looking at to trade this. So this is the area that I would be looking at for it to come through. And again, I like this area because of where it sits on the actual time frame of the day, right? And so for me, it's the middle of the trading day. I'm waiting for this to come, and then you saw it pick back up. You see that? We saw real volume coming into this area. And so I'm expecting this to come down, tap that area, and to push it back up. So that's about it in a nutshell right there. Give me one last little thing here. 10, 11. Pull down here, came up to there. So yeah, this area right there is what I'm looking. And what I'm looking for the market to do is come down 5 and 15 minute, and it looks like it's pushing up. Again, I don't mind if a market goes first goes against me or goes, because I know my trading is good. So I don't mind if I get stopped out, or I don't mind if I literally go through, because I have a correct a risk to reward ratio based off of money management. I don't over risk my portfolio, right? I'll risk 1%, right? To make that 1% and 1-to-1 ratio. And then from there, right? Because I get that 70% ratio, and if it comes back against me many times, a lot of times it'll create a new all-time high, or not all-time high, but it'll create a higher high as it comes down and pushes up, because the volume comes in, and then it'll come back down. I've already made my profit, right? So either I'll move my position up to the local low. So let me explain what that looks like. All right. So now that you understand kind of how I perceive the market here, you'll understand now what I look. I want to see momentum come in. So as you can see here, we kind of go back and around right here. Okay, you see how the 8-period moving average is playing. Whatever indicator you use for your momentum and trend, because they can be different as well as the same. For me, they're a bit different and the same. Meaning, I'm looking for an extenuating candle as it moves higher. To me, that is an expression of momentum, Momo coming in. And especially when I see a ton of volume come in, right? So if I see a ton of volume coming in at these levels here, and you see a ton, like here's the ton of volume, I'm sitting there going, okay, how are we going to respond to this 8? So as it starts to curve, I see price come in, and I start to see kind of a higher increase in volume and a lower increase in seller volume. So if I'm expecting us to see the reversal, I'm expecting to see volume come in as it breaks areas that should act as resistance. It starts to break them, and then I see a lower amount of seller volume. If I'm looking to go up, I want to see lower volume come in on the seller side, and I want to see a higher volume come in as it starts to progress on the buyer's side, showing that we now have conviction in the market. And more importantly, I want to see I love seeing this right here, where price will go above my area here that should act as resistance, and I'm using a 5-minute, but you can do this on other time frames. And I want to see it come down into this area, and then as it comes down and finds support, I love seeing right here where I see good volume come in, good volume come here, and you see, if you look at this red volume here, it was lower than all the previous buyer volume on the previous candles. So I know most likely that it's going to continue because sellers did not step in to drive the price down. They do not have a conviction to continue it down. So for me, I'm sitting there looking at this going, okay, we're finding support. So I'd be looking to get long around the test of this level here. Okay. I would get in roughly around here. I would put my stop at this low here. Okay. And I'm looking for a 1-to-1, right? That 1-to-1, let me test it here. Yeah, there we are. Boom, boom. And we're looking for a 1-to-1. So that's this area right here. And look, you can see it get tested. You see it come down. Now, so this is where things can kind of get played. If you do not have a large enough account, do not let it come against you. What you want to do is you want to bring it up to where you saw a down red candle and you saw it go up. So here is the local low, and then you have the low for this trade. I would move this up to the local low here, which would be right here. So if the price does come against you and we start to play in this area, you've made a little bit of money, right? Because you took out 60 to 70% on that trade. More importantly, also, if this continues higher and we start to see it push, you can keep bringing up your stop, right? Because again, you don't have a large amount. You don't have a large account. So you're trying to build your account. And this is where Tom has built his account multiple times here. So it's funny. I feel bad, dude, multiple times. Like you've literally gone from like 200 to like 1200, drop it back down, and then you go to 300 and you get to like I feel bad for him. But this man's doing it, dude. He's doing a great job. So here's the thing. You can see that it can keep playing here. This is what I'd be looking at. So those are my metrics that I use to see it going. And you can see here, we're seeing an increase in volume as it's going up, and you can see that most likely it's pushing up. Now, what I don't like about it is I don't see enough like fighting against the up movement, and I like seeing that. I like to see see it come down, right? I like seeing, the reason why I like seeing that go down is because when it comes down, it shows you, one, that buyers are willing to take in those sellers and then still push it back up because they're absorbing those sellers. And we'll go into that. Well, if you come back tomorrow, the next couple of days, I explained the difference between why it goes down, why you need buyers. That's why they need buyers. And as the market is pushing up, that's them saying that they need sellers. And I know it sounds weird. You're like, wait, that doesn't make sense. I'll explain that. Come back tomorrow. You'll get what I mean. Yeah, we went from 20 people, and that deep explanation, I realized I lost everyone there.
You tend to expand on a lot of knowledge at once. And
yeah, and I did. And you tried warning me, and I thought I was doing it, and I realized I wasn't doing it. And
bullet points at this point.
Bullet points.
Even I got halfway through that, and I'm like, oh man, I'm out.
Oh.
But anyway, ladies and gentlemen, I've been on this long time here now, about almost 2.5 hours talking. Pedro's been here the past 20 minutes or so. We have to satisfy our Rumble creator requirement that we do 5 premium hours. And so we're going to change the programming here into premium only mode. For those of you that are premium subscribers to Rumble, you will continue right on the YouTube, Twitter, and X feeds, or whatever will go dark. So if you want to come over and join us, feel free to come on over to Rumble. Use the subscribe and join premium button down here. We get credit for all the people that we sign up onto Rumble. You get ad-free environment. Oh.
What's up?
What potion was that?
Oh, this is right here. This is beeswax. This is premium beeswax. This stuff is the best. If you have acne issues, if you have skin issues, I take about maybe, I don't know how much, maybe 4 ounces of this.
The answer was beeswax. That was the answer. Okay, there we go.
Yo,
anyway,
wait, let me tell you, this is the dopest thing. You melt it down, right? And then you put in 2 shots of avocado oil, 2 shots of what's it called? Avocado oil, olive oil, red grapeseed, red raspberry grapeseed oil, or red raspberry seed oil, and then you put in like fragrance, man. You put it all over your face, your body, man. You absorb it. Oh, and castor oil too. I forgot. You want to do castor oil. 1 shot of that, and put your own fragrance, man.
1 out of 12. 1 out of 12. We've got a whack job on the line here. 1 out of 12. Send the ambulance with the padded room in it. Send the ambulance. 1 out of 12 out.
I have no problem. Lock me up, baby. You know why? Because I'll break out. You know why? Because I'm an Aztec warrior. No locked doors. No locked doors.
And just like that, his microphone is off. Anyway, ladies and gentlemen, we've got to go into Rumble Premium now. You're going to see a changeover. There might be a 30-second or so delay, even if you're a premium member. So stick with us. Thanks to everyone that watched today. Thank you to all of you on Rumble that are watching us, and to our new viewers that we had today, including you, Little Chiz. Thank you very much. There's a lot to learn on this channel. You got to take Pedro in over time to all the 50,000 different concepts he blasted you with. Every one of them is important, but you got to learn. You got to start with 1, learn that, then go to 2, then 3, then 4. And Pedro teaches 1, 9, 6, 2, 1, 3, 5.
Because the market is dynamic.
No, it's because Pedro thinks in quantum. That's why he thinks all those at once. All right, everyone. We'll see you guys on the premium side.